welcome everybody to today's CPE program, Central Statutory Audit of Banks, Key Procedures and Best Practices by CA R.RAVISHANKAR sir. So I now also welcome CA R.RAVISHANKar sir to occupy the dais. Before we start, I would like all the members to stand up for the ICI motto song.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैता
Thank you. Before we go into the section, I would like to have a short summary of CA Ravishankar sir. CA R.RAVISHANKAR sir is a fellow chartered accountant, has completed diploma in insurance and risk management with All India first rank and diploma in information system audit with All India 8th rank. He has been actively involved in bank audits, including various branch bank audits, both statutory and concurrent audits. He has also handled various central statutory audits of PSB and private bank. He has contributed to various topics in audits and taxation in seminars and webinars of ICI chapter and SOA. He is also empaneled as a peer reviewer with ICI and quality reviewer with QRB. He handles audit of various listed companies, PSB and PSU audits. On behalf of SIRC, we are very grateful, sir, for your presence here. And I also request CA Raghuraman sir to give away the memento for our speaker. I would like to invite CA Ravishankar sir to share his valuable insights and knowledge with us. Sir, the stage is yours. Thanks.
Good afternoon. Okay. First of all, I thank SIRC of ICI for giving me this opportunity to be before you for the bank audit seminar. I thank Chairperson CA Revati Raghunathan, Secretary and other office bearers. I thank everyone for giving me this opportunity. Dear professional colleagues, senior members of the profession, ladies and gentlemen, this is a very unique program, I would say, because normally you would be seeing branch audits, and ICA conducts a lot of central statutory audits. SIRC conducts normally branch audits. To my remembrance, not much of central audits, and this seems to be a unique one. And next month will be our auditing Mahakumbh. I think all auditors will be in the banks entire month of April, at least 15 days of April. So that will start. And now I was thinking about what will be my target audience, because being a central audit portion, engagement partners of central audit, they may not be there. Maybe the team from the central audit will be coming for that maybe they may be there, or aspiring to become a central auditor. Those audit team might be coming, and a lot of branch auditors might be coming. So that is a target audience. So I thought my presentation should be more of satisfying the entire audience, sectors of audience. So my presentation, anyhow, being a central audit, I won't be able to go to branch audit specific. It will be central audit specific, because those items which we see in central audit may not be available at branch audit at all. So it has to be central audit specific, but I've tried to cover certain areas where key findings, key best practices, which might apply to branch audit also. It's a good issue to be taken at branches also. So that could be one way where my coverage will help you also. What I propose will be this. First, I'll be taking on the central audit, introduction of a central audit. What will understanding of central audit, how we do the central audits, so that might be some useful to the aspiring central auditors. So next September, further vacancies in auditors are retiring from various banks. So you might be one of the firm which might be put into the central audit in next September, October onwards. So probably it will be useful for that. So what you should know, what is it central audit we do? Then what is the key procedures, because of departments and central office departments, what is the key procedures we do it? That will be specific in what bank we have done it. A little bit it will change bank to bank. So whatever we have done, I have done in many banks, that I have culled out. It could be different in other banks, but all the same, the procedures are going to be nearly the same. The names and the the names will be a little bit different bank to bank. Then the best practices, this is the part I'm covering the last. That will have a lot of branch specific issues. My experiences in central audit, which has got a lot of branch outs also into it, that will be very useful to you. Next is the audit reports. Again, that is going to be central audit specific. What is the audit report? What are the reports we are supposed to give? And what is the best practices which we have to follow in that? So this will be my area of coverage. So to start with, once you get the central audit, it starts with the usual engagement letter, SA 210. The engagement letter will be for the main audit of financial statements, ICFR. The terminology used in bank is ICFR. It is the IFCOFR, which normally is the word we use in corporate audits. In banks, they use it in different way. It's ICFR, both are same. And certification. So the engagement letter should be for everything. The engagement letter is normally, there are review audits. So we have done already 3 quarters. This is the 4th quarter being the year end. So every reviews, limited review which we do take engagement letters for every review, unless it is going to change. If there is no change, we'll have the same review for same EL for the subsequent quarter. So, but only thing, when the auditor gets changed, because every September there will be some new auditors coming in, so again an engagement letter will be taken. Anyhow, for the year end, the engagement letter will be different, because again we have a lot of other points to cover, so engagement letter will be different. Of course, last year engagement letter cannot come, because again auditor would have definitely changed. So new engagement letter has to be taken to covering all these areas, certifications and other areas. The engagement letter format is pretty same as given by the institute guidance note. There is no change in that. Then comes to the materiality. There is a separate slide for that. I'll explain. You have to determine the materiality for the bank as a whole. That is a very key issue in that. We'll see that, what is materiality. Then the independence. So of course, like in all corporates and other audits, assurance audits, the independence has to be given by the engagement partner, the engagement team, and this will be taken by the engagement partner, including the review partner. So we do have engagement partner, quality review partner, engagement control quality reviewer, so ECQR. So he also, and the engagement team, this will be the total team which we have. So all of them have to give their independence, that there is no debts with the client company, there is no key personnel related to the engagement team, and no indebtedness, no investment in shares of that bank or whatever it is. So all those same as applicable to all other corporates and all other assurance services, the same thing. So we have to go by the independence, and the key is it has to be disclosed to the audit committee that we are independent. So that is the main thing in independence. Next comes the joint auditor. Here is the difference. We have mostly it will be joint audits. Very rarely in some private banks it will be a single auditor. Normally all foreign banks will have some single auditor. Otherwise, mostly a little bit bigger banks, everyone will be at least 2, not less than 2, and goes up to 5, and State Bank and all has got 10. So the joint auditor responsible allocation, I'm covering that separately. The departments, now how we allocate departments, branches, that and all is different. That also I'm covering separately. Only thing, branches to be covered, the coverage is again given separately. Here the branches to be audited. See the total, there may be 6,000, 7,000 branches or whatever it is per bank. What are the branches which the central auditor has to verify? We central auditors have to take at least top 20 branches of the bank. So that is pretty same for all the banks. So 20 branches has to be taken up by the central auditor. So that has to be decided which branch, but that will change every quarter, because the top 20, one branch can be in top 20 in this quarter, based on the business advances. Next quarter it might change, so it will come down below the 20, so another branch will come in, so the branch will be different. The year end there could be a definitely different branch also depending on the business, so that will change, but it should be top 20 as per the RBI regulation. Then year end means we have regionals, zones to be audited, that again I'm covering separately. Then year end certifications and including LFAR, so that has to be done in the year end. The LFAR is again covered in a separate slide. I'm just giving an overview here. Then tax audit. Tax audit, the bank to bank it differs. Some banks have the tax audit done by the central auditor. Some banks have the bank tax audit done by outside another external auditor. So in statutory auditor, CSA need not be the same as a tax auditor. What happens in some cases is the branches tax audit also is not done by the branch auditor. Nowadays, the branches, statutory branch auditor, SBA, is not doing the tax audit. That has been taken away. So that and all is centralized, and the either the central auditor or another external auditor is doing the tax audit for the bank as a whole. And sometimes that is also done by the central auditor, and an external auditor takes up separately as a bank as a whole, or it is shared by the central auditor. So the various permutation combinations, or a lot of banks do it differently. So only thing, central auditor CSA is not mandated to do the tax audit. That is the only key thing in this. So SA 299, joint auditor allocation of work. I told you we have joint audit. So what is the division of work? So we, all the auditors, have to decide what is the work done by them, to be done by them in this year, entire 1 year. So it depends on, some banks are doing financial year, some banks follow October to next September. So they start with October and then end up with the next September. Some banks starts from financial year, April, then they end up with March. So that entire 4 quarters will be done, whatever work to be done, that is shared. So the division of work of the identifiable areas and specified areas. So this, what are the areas? Again, we will cover it separately. Wherever it is not divisible, it will be done and shared amongst the auditors. That has to be done separately. It will be worked out by the bank. So each auditor will be responsible for the work to be done by him, and whatever work to be done by the other auditor, he is not at all responsible. So I can give an example there where we were auditor in a bank and central auditor, and I was a consolidation auditor in one particular year. And in that year we had a QR, quality review for that bank. So that auditors, all their 5 auditors will get a quality reviewer, 5 quality reviewers coming to visit their office, auditor's office, in respect of that particular bank audit. So once the reviewer came to me and asked about consolidation and everything I have given, the reviewer was satisfied and he went off. One of the joint auditor whose reviewer came to visit that person had a query on the finalization of accounts. He was asking some query, which that joint auditor replied, I am not responsible for that work. I don't have the record also for that. So you can ask the consolidation auditor. So that reviewer wrote to the QRB saying, this is the question I asked, this is the reply I've got from the joint auditor. The QRB wrote to me saying, you are the joint consolidation auditor for that year, this is the query, please answer it. You are responsible to answer. So I had sent the reply to them, and that query was dropped after that, after my reply. So this is to show that each and everyone are responsible for that work, and the documents to be kept by them is only to that particular area. The other auditors' work, they need not keep the documents. So this is what is responsibility under SA 299. So that is the reason this letter joint responsibility statement is drafted, and each and every auditor, all the auditors have to sign against this before the commencement of the work. And then whenever, if I have an issue, I can throw it to the other joint auditors. Any information which I get, I can throw it to the other auditors, because I have to share it. This communication is useful term, so he has to get the knowledge of that. So through communication, I have to share it to him. When there is an issue which I am not able to solve, or there is a common issue, then this is brought to the forum of the joint auditors. So we joint auditors will have a separate meeting amongst ourselves. The common issue is discussed there. That will become a common issue. We have to say that this issue is thrown open to the joint auditors. The joint auditors can take a call saying whether this is the issue, this is the answer for that, reply to that, how to tackle that. When there are views or division, there are various views, then majority will prevail. So that is why it is closed. But one of the joint auditor can have a different view. So he can differ from the view, and in that case he has to record his view, give his report in a different way. Like in tribunals and all, member differing his view, High Court they differ the view, then goes to the third member and all that, like that. But here the auditor can give a different view. Normally it doesn't happen, but the possibility is there. So he can give a report, and he can say this is his view, he is qualifying his report, or he is stating this report like EOM or whatever it is, he can state it. So that is his view. Then as I told you, the branches to be allocated, the zones and the departments which they are going to see has to be specified in this work allocation, and all the auditors have to sign. This is a very important document to show that this person is responsible only for this. So normally some banks, they prepare this work allocation and it is agreed upon by the auditors. Sometimes it can be the auditors can say in a different way, and it is discussed with the banks to find out that it is allocated to each and every auditor. This is only bank is involved in that because there should not be any duplication of work. Suppose I do consolidation this year, I can never do consolidation for the next 2 years. It is not allowed. If I do a particular branch this year, I'll not be able to do the same branch in the next 2 years similarly. So this allocation repetition is to be handled only by the bank, because the auditor cannot do that. So the bank helps the auditors in preparing that, which the auditor is agreeing to that. So then it is signed off. Then there's a routine thing. We discuss with the central auditor has to discuss with the management of the time schedules, the timelines. You know, the timelines are very pretty stiff. The branch audits has to get over by 10th. The zonal audits has to be over by 20th. The central bank audit has to be over by the month end. So first week of May, anytime the audit committee, the board has to sit for the finalization. So this is the timeline we are talking about, around 30 to 40 days. That is a max. We'll have time to finalize the bank before we go to the board. Then next one is a very important thing, which is the branch related, where the audit guidelines to be given to the branch auditors. The central auditor has to also vet out the documents. The audit guidelines is a fantastic document. Even a branch auditor can see that it is provided in the system. Once the branch is allotted, the audit guidelines is sitting on your lab system. You can see the audit guidelines. It specifies each and everything. It's like a guidance note, institute guidance note. So they have completely given each and every item how to do the audit, what is expected of you. The audit guideline itself is a simple, complete guide for you, specific to the bank. So that is one very important issue. The guideline has to be seen by the branch auditors. So this is vetted out by us, so that to know that whatever we want to say to the branch auditors is put into that. Then the another one is the bank inspection department with concurrent auditor. This is not mandatory, but some banks insist that the concurrent auditors have to be brought into this field. But this is not normally done in the year end. It may be done in the mid of the year also. but we also be present there because concurrent auditors do not report to the central auditors. They are reportable only to the bankers, so bank management. So we also sit in to see what we expect from the concurrent auditors because they are our eyes in the bank. Rather, the next is the branch auditors. They are there day to day, every day. So their report is what we see when we go in the year end. So that is more important for us when we visit our own top 20 branches. We only meet the concurrent auditors. So we are also present in that meeting to find out what is told to the concurrent auditors, what we expect from the concurrent auditors. That is also percolated to them. This is the next one, which normally some banks do it. The central auditor meets their regional or zone. Sometimes they call it as regional office or zonal office. Both are same, regional or zone, and the branch managers. So once we are allotted a particular zone for the year end, and branches are allocated to the zones. So we normally try to meet the regional office managers and the branch managers fixed to that zone, so that we will be able to tell them what is what do we expect, how to finish it before the timelines, they need to talk to their branch managers and all. These things are discussed so that the audit gets completed in a smooth fashion. The last one is the meeting of the branch auditors. This is very specific. Again, there's one more slide on SA 600. So I'll be explaining to you on that. We meet the branch auditors. This is very important because branch auditors are reporting to us only. So we need to meet the branch auditors to tell them what we want from them. So this is very important. This is done. Then the audit starts. Sorry, the slide was not. Then the consolidation. So what we do in the consolidation, the top 20 branches are audited by the central auditors. Branch auditors, they do audit of their branches. Some branches, they may not come under the branch auditors. They will be done audit by concurrent audit or inspectors. The inspection department determines how that has to be audited, who is to audit what. One concurrent auditor goes to another branch and does the year-end work. Some inspectors of the branch themselves will go and complete it because it is not mandated for branch audit. So that is done. Very, very small branches, branch managers gives their report. That is what happens. Then all these things are consolidated at regional office. The regional office and zones are year-end audited by central auditor. The consolidation of zones only take up at the central office. Not all the branches per se will come. The zones which has got the branches consolidated, the zones will be consolidated to the central office. Foreign branches are also consolidated. Foreign branches are audited by their rules and regulations of that particular country. That report comes to us. Then this is a pre-MOC trial balance. The pre-MOC trial balance is nothing but the CBS trial balance taken on that day of 31st March day end. So that is a pre-MOC trial balance. So that will not have any change. It will remain the same forever. Then you will have the MOC Pan India. So all the MOCs, that is our journals passed by each and every branch auditors, department, zone, everything is consolidated at the head office. So there is a fine system now evolved. Earlier it was very difficult that all the MOCs are passed today. That is, let us assume it is passed on 15th of April, Pan India, it comes to the head office. So these journal entries are passed, it is put in a system, and the pre-trial balance, pre-MOC trial balance merged with MOCs is the final trial balance which you get. These are all outside the CBS. It doesn't go to the accounts per se. So this is done outside the system. Once the board approves, these MOCs are now it will hit the CBS system. There was earlier, because the MOCs, you won't believe how many MOCs are coming. It will be even thousands, 1,500, 2,000, 3,000 MOCs will be there. So all the MOCs which are passed, it has to go and hit back the CBS. Earlier there was a lot of problems that some goes to, it will not go to branch straight. It will go to the zonal office. From zonal office it will hit to the branch. So a lot of mistakes happened and a lot of issues was happening. And now a lot of banks have already centralized, computerized that MOC part of it. So once they put it in the system in MOC, there is a system by which this takes all the MOCs, and once the board approves it, they they'll hit to just a button, it automatically goes and hits the CBS of a particular zone to the branch separately. So everything is reversed and hits the CBS for the next year. So this is how it is happening. So this has to be verified by the central auditor, MOC, pre-MOC, the MOCs are passed, and in the next quarter when he comes after the audit for the first quarter, he has to see whether these MOCs are hit back to the CBS. Then Once the MOCs are coming, the post-MOC trial balance, this is a normal trial balance outside the system. That also is computerized. Once the CBS is loaded into the system, all the branches, foreign branches, they get a global trial balance, and then the MOCs will get hit, and the post-MOC TV will come. Automatically, you will get all the final schedules. That is a standalone balance sheet, final schedules, everything you are getting it. Once the consolidation is there with subsidiaries, associates, and all those things, that also come to you. Then that is coming as a consolidated trial balance sheet and all that. So this is how it is done. And then the notes to accounts, accounting policies are drafted, and we get the final bank balance sheet. Then we have the audit reports, independent auditors report, ICFR, LFIRs. Then SEBI in year end, we also still have to give the SEBI limited review reports, combined audited review reports. This is how the complete consolidation pattern. Coming to the departments which we have to see in central office, this is not branch specific. It cannot be in branches. So what we do, what central auditors does in head office, sitting at head office, they are looking into the accounts department. There is a risk management department, various verticals, compliance, NPA, that is recovery department, where NPA is handled separately. That's a very important department. Treasury department, the very most important department. Corporate credit department and monitoring department. The names will be different to each and every banks. They may have a different name also. Digital banking, that is very important nowadays. Rural business departments, retail departments, fixed assets department. They call it as SFVM, Safe Furniture Vehicles Machinery. SFVM, that is, of course, branch managers will be knowing it. This word is used for so many years. Estate department is properties, stationery department, legal department, inspection department, vigilance, corporate secretary department, expenditure department, investor cell, HRM, credit department, credit card department, bank assurance. We have other services, bank assurance, language cell. So this also is mandated that you should have a language. Now language is a hot topic in Tamil Nadu. So we have a language cell in each and every bank. What report you will have in that bank, in that particular department is very, we used to think, what is the report you are going to give it in the language cell, because that is one of the work allocated to the central auditor. When you go into it, you can see a lot of compliances to be given. So we found that they have to report to the government of India. There is a return to be filed on a language policy. So a return has to be filed within a particular timeline. And there was some compliance issues on that. So that was also seen. So even a small item, which we thought it is a small item, we have a lot of issues on that. In the sense, compliance issues. And there was also supervision. You have to supervise whether the language policy has been supervised by another branch, one branch to another branch. So that also has to be seen. So we found that for a particular small department, we have a lot of issues, a lot of compliances spelt into it. So that is a level of department. We may think it's a small department or something like that, but definitely each and every department has its own compliances to be done. Then some banks, what they do is they have a balance sheet and a PL statement for each and every department, even though it may not have any financial implication also, but that is for control purposes. That is done, and that is added to the final financial statements. Now coming to the materiality, this is a very key issue because we have problems. Central auditors have problem because central auditor has to communicate to the branch auditor what is the materiality of the bank as a whole, and the branch auditor has to communicate back in SI 600 to the central auditor what is the materiality he has determined in the branch. So we received a lot of queries from the branch auditors, so many queries. Sir, how to determine materiality? I don't know how to compute it. Some have said 0. Some have said more than the bank itself. If I say 400 crores is the materiality at a bank as a whole, they say 600 crores. I don't know how they calculate. A lot of queries came, sir, how to calculate. I have done this calculation, please verify whether it is correct. So I think materiality is a very big issue because a lot of auditors are not communicated. I mean, the institute has done a wonderful job of having implementation guide on all items. Where it is something which no one is able to, I think that knowledge is not there. I mean, that information is not there. You can refer to implementation guide to planning and performing an audit. There is implementation guide on materiality itself. Lots of examples have been given as to how to compute the materiality. That is more than enough. little bit, this is actually materiality is nothing but to do with the risk analysis. If you don't do the risk analysis, you don't get the materiality. Now, large firms and all depend on the audit tools to get the materiality. The moment you feed the trial balance, the materiality is thrown here. Only the risk factors we have to feed in. What are the risk factors of that particular entity? We get the materiality automatically. We don't need to do any calculation. Audit tools are available, but that is available to all big firms. Other firms, they can very easily do this. Just see this implementation guide. It will give you a lot of examples to do that. You have to read this in conjunction. That's what material misstatement, say 450. Overall materiality, performance materiality, trivial materiality. These three things has to be worked out. The overall materiality, it is the amount of influence of a material misstatement or omission of information in a financial statement that could have a bearing on the decision of the investor. So that is as simple as that. How do we calculate overall materiality? The risk assessment factors has to be determined. And the next slide, you can see that. What are the risk material factors? You have to determine this is entry specific, a judgment of the auditor alone. What are the risk assessment factors? It can be a new engagement. You may be doing a new engagement. Internal audit function, how it is performing. Complexity of operations. Changes in regulatory requirements that is applicable to bank. A lot of changes in regulatory requirements. Liquidity concerns. IT systems updation. The most important sort, IT systems is a big thing in bank. Prior history of frauds. Override of controls. Yes, that is possible. Next is risk control matrix in ICFR. What are the issues in risk control and how RCMs and how it has been mitigated, how it has been qualified. Then key personnel. Definitely this also has, because the one branch manager leaves, another branch manager comes, the main department man goes away on retirement, next man is not able to cope up, issues are there. There you have to give the risk factors. So these are the main risk factors which determine the materiality. Coming back to that, now these are all the factors. So first is the risk assessment functions, which I just now we discussed about it. Then what is the level of risk? You have to give a weightage. Weightage to each and every the risk which factors you have. What is the weightage? 1, 2, 3. Then go, if it is 1, 2, 3, you have to determine what is a medium risk, low risk or high risk. Then you have to determine if it is a low risk, it is coming to 0 to 10. A medium risk, 10 to 60%. High risk is 60 to 100. So there you have to total it where you are. All the factors you total it. Assume you are in 30%. Once you are in 30%, you know it is in a medium risk because 10 to 60. So if it's a medium risk, the factors is the materiality range has to be seen next. Materiality range is low means from 8 to 10, medium 7 to 8, low is over 8 to 10, medium 7 to 8 and high is 5%. So there, this is the percentages determined. Once you say if it is 7.5%, 7 to 8 means 7.5%. So this is the factor of percentage which you have to apply on a figure. What are the figures you get? What are the materiality figures we can do? You can go based on total revenue, total assets, profit before tax, total expense, total equity. So assume it's a profit making entity, you take total profits. So profit before tax. Now you apply the 7.5% on the total profits of 3 years average. On 7.5% you get some 400 crores, 500 crores, 600 crores. So that is the figure of materiality you arrive. So this is the way the materiality is calculated. You get the overall materiality. Fine. Now coming to the performance materiality. Performance materiality is something where the materiality is determined at a lower level compared to 400 crores. The overall materiality, it is determined at a lower level. The lower level is because of the L&R and the FRF. That is rules and regulations and the financial reporting format, which requires you to disclose those items. Like advances, you have to see 10 crores, like that. So those things are there, then the materiality that is fixed at that particular figure. So you determine a lower materiality for those items. But the issue on that particular materiality, if it is aggregated, it will increase, it will surpass the overall materiality. So that comes the performance materiality. So that is how performance materiality is calculated. Normally it is calculated at 75% on the overall materiality. That's how it is done, or material specific. You do at these items, you do at this particular value and all that. That is a performance materiality. Trivial materiality is something which never comes to it. It's let's say 5% or something like that you calculate, and we say it is trivial, so it is ignored. Even there is a material misstatement also on that, it is not material, so misstatement is ignored. So that is trivial. So this is how you have to document the materiality per se, and then communicate to the audit committee that this is what we have used to compute the materiality figures for finding out a material misstatement in the financial statement. This is what it is. Please read Implementation Guide to Planning in Performing an Audit. This is the guidelines. In fact, there is a Excel sheet also given by the institute. I don't remember that some agency, I mean some department of institute has given that. There is an Excel sheet showing how the computation itself is to be done. Beautifully they have documented that. This is the regular planning. Once you enter into the bank, you have to understand the banking environment. You have to take the bank credit policy, loan policy. That is very important. Otherwise, without that, you won't know what this bank is doing. You can't apply the same to all the banks. Banks will differ. Investment policy, that is a Treasury department. Various products and schemes of the bank. The NPA policy, the recovery policy. The accounting policies is very important because sometimes you can follow cash system. So what are all the items which you follow cash system? Financial services like bank assurance and all what is provided by this bank. The IT policy and the system audits. Software architecture, because the software Finacle is different. Various banks have different software, so you should understand what software, what is the architecture. Coming to the branch level also, you have to see that SIF opened should be one customer, one SIF. We do have a lot of issues that one customer having many SIF. This issue is there. RBI is also pointing out that the issue is there in a lot of banks. So that is to be found out whether that is possible. Rate of interest master, minimum balance charges, how the bank is policing, because they are very small, branch specific, but we need to know what is happening on this. Matured deposits and the interest policy, inoperative account, unclaimed deposits, what is the policy as per RBI, whether we are following the policy, the bank is following the policy. This is about the financial services, what is the approvals and compliances, income from such financial services, how it is accounted, and confirmation from third parties, mostly third party service providers. So we have to understand what it is. These are all to be done before when you go into the bank to start with. Now I'll go with the department specific. Best practices per se I'll cover in the second part, or I'll say third part. Here we'll go department wise. What I'm going to cover is on investments. Investments is again for the bank per se. Whatever I'm going to cover may not be applicable, or if it is not required, you can tell me, I will skip that. I'll just start with it. If you want, I'll continue with that. The investments, it has a lot of change from last year. So earlier it was following 2020 circular directions and the master directions of 2021, where the investment valuation, everything has been determined. That is what investment policy, that is the investment valuation, everything has been done based on that. Now 23, the RBI has given it a completely different picture, entirely different investment pattern structure. So now that is applicable from 1/4/2024. So up to March 25, the entire 1 year, we are applying the new policy. All the 3 quarters also it has been already done. This is basically Ind AS 109. Looks like Ind AS 109. They have started following the Ind AS. So this is the first time nearly Ind AS is into the bank. This is because of the global financial reporting standards, the linkages to the capital adequacy, and the progress in the domestic financial markets made RBI to come with this new standard, new guidelines. It is again principle based classifications, and now we have HTM, AFS and FVTPL. So HTM is held to maturity, AFS is available for sale, FVTPL is fair value through PL. So this is what the 3 classifications. What we don't have, which was earlier, is HFT, held for trading. That comes as a part of FVTPL. So that doesn't come as a separate item. So this is the basic thing. This is nearly in line with Ind AS. Sorry, I have not changed. So this is what I've been telling you about. From 1st April, this is applicable. This is what I have explained to you, why it is revised principle based classification, and HTM, AFS and FVTPL. This 3 tables I've given, what was the new change, what was there earlier. To be very fast, I'll move very fast. This first one I have just told you, HTM, AFS and FETPL, which was different, which was HFT earlier. Investment subsidiaries, now it is moved out of HTM. It was earlier HTM, now it is not in HTM, it is moved out of it. HTM, how it is taken, HTM calculation, it is based on satisfying certain conditions. Earlier it was specifically securities were identified to be HTM, now it is based on certain conditions. And no limit, earlier there was a limit of 25%. Now categorizing AFS, special conditions has to be satisfied to be an AFS. Earlier it was a other residuary one, other than HTM was AFS. Now FETPL is the residual one. All others, it doesn't fall under that securities, it comes under FETPL. Holding period was not there in FETPL, earlier it was 90 days. Reclassification only in certain specific circumstances, which was not very clear earlier, now it is very specific. You have to have a detailed approval to go for a reclassification. The main one is it's on fair value. Earlier it was on acquisition cost. Day one gain is recognized. HTM is carried at cost and no market to market MTM is not there. That is same as in last time. AFS at fair value is also same. That is both 11 and 12 is same as earlier. AFS revaluation gains, credit and debit, they have given to AFS reserve. Discount on premium acquisition is amortized on AFS. So that was taken to P&L earlier. So small changes in how you take the valuations. FETPL at fair valued, amortization again. Investment subsidiaries at acquisition cost, with discount premium on acquisition to be amortized. Earlier it was at HTM, I have told you earlier. Hierarchies of FP hierarchies on 1, 2, 3 is introduced. Of course, that is from March 26 onwards, not in this year. Earlier it was not there. Investment reserve account is thrown away. It is not there now. Investment fluctuation reserve continues. Then they have asked you to go with ICA guidance on derivative contracts, except for current classification. Otherwise, you have to follow that standard, which was not there earlier. Derivative assets, how to show disclosure has been specific. It was not specified earlier. Various other disclosures consecution to this change has to be given in 25, year ending 25 and year ending 26. Earlier, the difference, whatever method you followed, that was a different disclosure. Now the disclosures are getting different. These are the main, I have broadly covered it. These are the main changes in the investment valuation. And very important, I don't know whether I covered it, the change you have, I think it is later, whatever changes has happened, you have to take it as at March, April next year. As at 31st March 24, transitional provisions have been given. So I think that is coming on the next one. Yes, yes, it is later. So the next one, I think we can skip that. Alternate investment funds, you can skip it because it is how you have to do it in alternate investment fund has been specified. Now coming to the main thing is operating control effectiveness, substantive audit procedures has to be maintained, and the auditor doing the Treasury audit has to see that. Reconciliation of investment balance with custodial accounting statement. Scripts held at branches has to be confirmed by the branch auditors to the central auditor. NPI, that is also to be similar as NPA. So the investments, once there is an NPA similar to the investment held on that particular asset, NPI is also non-performing investment. Similar to that NPA form also is akin to NPA. So that also, that non-performing is there in NPI. Then special accounting like excome, dividend, interest, bonus, everything is to be accounted. This is one of the major accounting entries, and verifications is to be done by the bank. Of course, all system driven. So we auditor has to just verify that. These are the transitional provisions. So investment fluctuation reserve, how it is to be created, 2%. What is the transfer to be done every year? They have specified. The investment reserve account has been removed. So for transitional, what is to be done? What is the balance? How to be taken to general reserve? So that they have given. The policy. Now in this year, March 24, we have to give the policy as to what is the change happened in the investment valuation, how it has impacted the general reserve and the profits of the bank. So that will be an accounting policy change. But of course, it's mandated by the RBI. So it's just an information which we have to give it in the notes to accounts. And then the auditor at Treasury branches has to give a lot of special purpose certificates, reconciliation of securities, key prudential and other guidelines to be followed, and he has to give a lot of certificates on that. The very important thing, Treasury is a CRR, SLR, has to be certified by the auditors. For that, he has to verify the DTL, demand and time liabilities, position, maintenance of liquid assets. He has to understand all the circulars of RBI. Time and again, a lot of changes happen in these ratios, procedures. He has to keep knowledge of that changes and do that verification. And of course, you know that 12 odd dates SLR, CRR has to be given, because that Friday dates branches give to the central auditor. I can move to ALM, liquidity risk management for LCR, NSFR. These are all some of the ratios which has to be verified. ALM is the asset liability management. ALCO is the asset liability committee. So these things has to be verified by the auditor in the Treasury Department. The investment policy, that has to be done before he gets into the Treasury Department. Compliance of circulars, the income accounting, how the income is accounted, verification, valuation, NPI, SLR, already disclosed, seen. And disclosures in the financial statement is what the Treasury Department auditor has to complete. So this is the overview of a Treasury Department verification by the central auditor. Frauds risk. So there is a department, a vigilance department is there, fraud management department is there. So that has to be verified by the auditor. He has to rely on the 15th July 2024 circular issued by RBI on the fraud risk management. The policy has to be seen. What is the policy of the bank on that? Very important is the EWS and RFA. I believe you had already a seminar, 5th or 6th, there was a seminar on EWS and RFA, red flag accounts and EWS early warning signals. So you already had a seminar, your discussions on what are the items which will come under that. I think it is a RBI Master Directions 17th July 16, updated 3rd July 2017 on the red flag accounts with the EWS in Annexure 2, where 42 instances had been given as to what are all the probable items which a bank has to see into in a particular account where there will be a red flag can be shown if there is a early warning signal. So that has been clearly identified. This has to be branch specific. Auditor, once he sees that, it's very difficult from a central auditor to see it, but it is very specific from the branch audit. So they have to see the red flagged accounts. EWS warning signals has to be seen. This has to be mandated. Now that is what it has to be fed into the system, and the system has to throw these things. That is what the RBI has now given to the bank. Once it is a red flag is there, it has to be reported within 6 days. That is 7th day, it has to be reported to SIRC. And within 180 days, if the red flag is not removed, then it has to be classified as a fraud. So that is very important. Fraud management, the key data, this again can be in branch. Date of occurrence, what is the date of deduction, date of classification. Date of occurrence is something which we won't know, it is found out later that a fraud has happened on that particular day. Suppose in January 1st, January 2nd, the fraud has happened. What is the date of deduction? Today we came to know that there is a fraud has happened. Something has happened, so they will say this is the date of deduction. So today it will be deducted. So today 10th of March. But then there are a lot of things happen. It will be taken to the zonal office. It will go to the fraud management committee. Then reports, investigations happen. Investigation department comes in, they verify it, and then they will find out whether there is a fraud really has happened and whether it can be declared as a fraud. Once that is finalized, it goes to the committee. The committee decides, yes, this is a fraud. So that date is the date of classification as a fraud. That date is what is important. Within 14 days, we have to report to RBI in FMR. If you don't report within 14 days, automatic penalty will be on you, on the bank. So that is the date of classification. What the key issue here is, what is the date of deduction to the date of classification? The gap should not be more. RBI is very particular on the gap between the date of deduction to the date of classification. Why there is a huge gap? If there is a huge gap, what is the number of months it can happen? 5 months, 6 months, 8 months? It can't go to 1 year. So that has to be determined. Auditor cannot go into the specifics. He is not an investigation officer. But he can see if there is an inordinate delay in that classification by which the bank is trying not to report this fraud to the RBI. Is there a possibility? Is it happen? So now banks have come down to even 5 months and 8 months. Within 5 months it gets reported. So that is how the trend is going on. So RBI is very specific on that. They ask the auditor, central auditor, they call for the meeting, they ask why this fraud is detected, classified late. Have you gone into the files? What is your view on that? So they do ask the central auditors. So we have to report, we have to take a sample. I'll be having in every quarter 100 to 200 or 300 frauds. Advance related, non-advance related. Advance related is an NPA, so no issues. Non-advance related is a different issue. It's all customer related frauds, cyber frauds, all those things, which is all deposit related. It is not advance related. So there, what is the reason? Staff accountability, whether there is a staff accountability, that is the first thing they will be, inspectors will be seeing, the bank will be seeing first. That is where the delay happens, because they have to have, they have an opportunity, they have to give an opportunity to that other person, to the staff, to the outsider, third party, to get their opinion, then only they can do it. So definitely we understand that it will take time. But what is the time? You can't put a yardstick of 5 months or 8 months also. Sometimes it goes to 1 year. Yes, it's possible. So you have to see why there is a delay. If that is explainable, fine. Otherwise, they should not be prolonged one. You should not prolong it. So that is the point. So we have to answer the RBI on that. Next is very important, closure of frauds. This is not at all happening in any bank. The moment you report a fraud, it goes to the FMR and RBI is flushed with reports of fraud. And RBI is saying, I am having lakhs and lakhs of fraud intimated in my register. And it doesn't close. It goes on, goes on, goes on, goes on. What happens? They don't know. They are having umpty number of frauds in their file. So there is a closure requirement. There is a called closure module. So there are items specific how to close the fraud. For example, where the case is gone to the court and the court, it is let off, case is closed and staff accountability is closed, then you can close the fraud. Where you have gone to the court, but that is FIR has been filed, but the case has not been, charge sheet has not filed for 3 years. Then you need not worry, you can close it. But staff accountability is the same. Even if there is a proceedings are not taken by the court for 3 years, then you can close it, provided staff accountability is closed. So there are some guidelines given. So you have to see whether you fall under the guideline to close. Because once you close it, the responsibility is on the bank. You're wrongly closed. The RBI will again pounce on you why you're wrongly closed. So that issue is always there with the bank, in minds of the bankers. So they may not easily close it, so that they may have a problem later. So understandable from both sides. So the closure, the RBI is asking the central auditors why this closure is not happening. So we have to give a reply as to why, what is the closure module, what is the closed. I haven't seen so many years which I have done audit, at least when this issue was taken up, at least 10 to 15 accounts gets closed every quarter. They have started, the banks have now started closing it, because so that the numbers comes down in the RBI portal. So that is what they are also thinking about. Then possibility of fraudulent transactions, you have taken the NEFRA, SEBI has given a new LODR that you have to, once you detect, when you feel that there is a fraud, you have to disclose. So that is already there, but it is only to the senior management we have to report. In LFAR we can report. Then provision is made at 100%. They allow you to have 4 quarters to make a provision. If it spills over to the next year, for the amount of spilling over, you have to create a reserve, provision out of a reserve. Then next year you can take it to the P&L. So that option is given to you. Again, these are all central office related. Supreme Court decision in July 24, you would have seen that principles of natural justice has to be seen. Whenever you want to take it as a fraud, that you have to give a lot of hearings to the both the parties, whoever parties, other parties are involved, the Rajesh Agarwal case. So now again bank, everyone will go on the back footing, because once the Supreme Court has given a decision like that, so you have to give a lot of opportunity to others, see that every natural justice is done. So that is where it pulls you down. So the fraud detection classification can get delayed. So anyhow, the banker has to see that, so whether that has also been taken into account. Then recovery in frauds, whether the recovery is properly brought, because you take 100% provision. Once some recovery comes, the provision can be brought down. So it only reduces the provision on the bank. So as an auditor, you have to suggest, yes, recovery has happened. Of course, it is centrally done. If it is not centrally centralized, you should see that the recovery is properly intimated, because it is branch specific again. The recovery comes to the branch only, not to the central office. So there the branch has to intimate to the central office to say that it is recovered. The provision can be brought down. The reporting of frauds, you have to refer to the recent NEFRA circular. NEFRA circular is given on frauds. What is the reporting? The reporting by the bank, by the auditors. It is addressed to the auditors. NEFRA communication is addressed to auditors to report the frauds to the appropriate authorities. And that is different from what RBI stipulated of 14 days and all that. And so there is a confusion as to whether it is applicable to bank. So that is still at that. Bankers, anyhow, we are regulated only by RBI. We can't, NEFRA cannot overrule that. But that issue still remains. The SEBI LODR is different. Again, that has got a different reporting standards. But that is also applicable to high value of frauds, not employee customer fraud or advance related fraud. It is applicable to the management frauds. So that also, definitely the reporting value is high. So there is no issue on that. But again, whether it is applicable to us is something which is to be seen, because SEBI is different, RBI is different. Digital banking, this is the era now. Everything is digitalized. So what the digital banking is doing is the IS controls, business automation, cyber security controls, IOA related controls, migration, cyber security framework. I will just go on that, because the vulnerability testing, CISO is there. A CISO is to be appointed. He has to do the vulnerability assessment for each and every products which you develop, because everything is done on the system. And once you go to the bank, if you want to open a loan account, it is on a tab. It is not on the, no documents are coming in. You have to just open the tab, and all the documents you want to submit has to be given to them. It is uploaded, and the loan is credited to your bank account straight. So everything happens in this thing. So that vulnerability assessment has to be done for each and every product, which once it comes, we have to see whether that things are set right by the CISO is doing that assessments. Migration audit, that is also mandated. The data protection framework, that is the talk of the day, because the data protection is very key. All the banks relate, lot of frameworks, lot of directions are coming from the government. For example, Digital Personal Data Protection Act. So that has to be configured by the banks. So a lot of things are still going on. It is on the offing. Various third-party persons are validating that, and the framework is put into the system of bank. Whether what stage it is, what are the gaps in that, how the gaps have been addressed. So this is done. So now what has happened is, this digital banking has come off late to the auditors now. Earlier it was not. Now since the digital banking is very high, it is happening at all levels. So now all the banks want the auditor also to verify. So we are also seeing those departments. So we have to be conversant with all these things, all digital items. What are the new acts? How the policies are framed? How it has been followed? So that auditor is responsible for that. I can give you an example. Of course, bankers are here. I can give an example where in digital banking, there was a case where one account was opened in the tab. While that was getting opened, it was just saying loading, something like that. The customer was in front of the person, says, no, my account has to get immediately open. So the person bypassed that and opened the account again. Without knowing, there was another account opened. 2 accounts were opened. This was found out in the audit. And then the vulnerability was verified. Why that 2 accounts got opened? With all the systems in place, same person, he has got 2 accounts. 2 times the amount was credited. The loan also was credited twice. This has happened in some bank. Don't please tell me which bank I am doing. So it could not be at the bank. It could be from a different person also. So whatever I am now telling is not my bank specific, because we have done so many banks, and I hear my other auditors also. We discuss, my colleagues of other banks, we normally discuss. So in meetings and all we discuss, we get to know about a lot of other issues. So this has happened. Then immediately the digital banking department came into saying that yes, this was plugged. Now it has been plugged. So what I am trying to say is, you can't say that everything is proper at all times. So that is the reason auditors are into it. We have to go on checking. We can't say that all the processes are put, okay, it's fine. Anything can happen anytime. Some issues can happen. So that is the reason we are still important. We have to see these things. As I told you, digital lending, lot of products are offered on that. Third-party providers comes into it. The regulated entities, that is a bank with the lending service providers, digital lending apps are there. Whatever that is done by them, the banker is not offloaded of his responsibility. Banker is still liable for everything. The very big circulars are the 24th June 2020 circular and 2nd September 22 circular, guidelines on digital lending. This June 20 circular is on the loans sourced by banks over digital lending platform, adherence to fair trade practices code and outsourcing guidelines. Such a big circular. So that has to be seen by the digital department verifying auditor. He has to go through that circular. What are the practices? What is the government has prescribed on this? He has to prepare a checklist on that. So that is a very big issue for the particular auditor. He has to completely read that act and what are the specifics in that checklist. He has to prepare a checklist. See whether this has been followed by the bank. And this is a documentation which he has to keep once his reviewer or an EFRA comes to him. So how you have verified, how are you satisfied that this has been done? So this is a very big responsibility on the auditor. So digital is very much on the thing. It's a very big item, very big department. A lot of things are happening. So you won't know every day one new act is coming, new regulations are coming. We won't know also because for RBI, yes, I know what is happening. This one comes in the press note where we don't know what is happening. So we have to be with the bank. They know that very well what is happening. They will communicate to you. So you have to sit with them, get the details, find out how it has been addressed. Then prepare your audit checklist and see that the bank has complied with that. Keep it in your record. This is the working paper we have. So this is the digital banking. Very important on the digital banking unit, hub. So this is where it is different. See, the banking can be done by any branch. Digital products can be done by any branch. But the bankers have asked to do, the RBI has asked to have a digital banking hub. So they may be having 6 to 10 units per bank or something like that, which will be dependent on that. So that regulations also has been specified. And as far as auditor is concerned, that becomes a separate segment. Digital lending, banking itself is a separate segment. We have to give a segmental report as per AS 17. The issue here, what I had, my personal feeling was that, of course, I had taken it to my other auditors, to the bankers also, but as to what is a digital lending segment, digital banking segment, because it has to be segregated, shown separately in the segment reporting. I can read that the business involving digital banking products acquired by DBUs or existing digital banking products will qualify to be clubbed under the segment. So, are they talking about only DBUs or are they talking about the entire lending banking products? In that case, the entire 6,000, 7,000 branches, the digital lending is happening. If it is DBUs, 6, 10, 15, 20 or 100, that is all. Because the segment shows in all the banks, if you see the annual report, there is a clear note that only DBUs are covered under the digital banking. They have cleared that, they have mentioned that the DBU of the bank operations is disclosed as digital banking under retail banking operation is related to the said DBU. This is the note they have given. So there is still a confusion. There should be a clarity on that as to whether the entire thing. In that case, that will be huge. Entire 90%, 80% of the transactions will come under digital banking because everything is digital now. Very hardly you get normal sanctionings. So that is a different thing. So this has to be clarified. But as of now, this is what the disclosure has been given by the banks. HR department, we have to see what is the HR policy, adherence to ethics, whistleblower, these are all the same thing. Actuarial valuation, same thing in bank. Wage revisions. So, you know, a lot of issues, wage revision is the bankers, IBA, bankers associations, everything is there. So wage revisions will be there, not granted to the employees. So how the bank is making provisions on that. So that and all has to be seen. The HR division will be subject to concurrent audit. We have to see their reports. The disclosure as profit per employee, business per employee ratios has to be given in the annual report, notes to accounts, so that has to be seen. Code on social security is a big thing which has come 2020, it's not yet implemented. It's going to be it is a very big issue. Social Security 2020 is not yet notified. If it comes to, there is a lot of things on that which auditor has to see, the bankers have to comply with, except for the additional provision which has been notified in 2013-23, effective from 1/9/2014. So that has been made applicable. Then also the complaints of RBI circular on family pension, which amortization is given, and that some banks do make a provision on that, and amortization they're giving a note. So that is a separate item on its own. MSME vertical, OTR is a one-time restructuring, because MSME COVID, I'm not taking it separately because that is there for years now. So MSME restructuring, COVID element, a lot of circulars have come, how to restructure it, whether it is standard, it is a standard on restructuring, and they have to follow the restructuring pattern, then it is kept a standard, then they come out of it. A lot of disclosures, even in the balance sheet, if you see, 2 pages or 3 pages is on restructuring on MSME and COVID. That is what is there, all the figures, how much has been restructured, or what is the figure, what is the closing balance, opening balance, how much it was, now what is the balance, all those things, what is the additional provisions, all those things are disclosed. So I don't know how far they read it and all that, but that disclosure has to go to in the annual report. So that we are disclosing, it is all figures, we see. Only thing is, what is OTR to be done, whether a subsequent OTR cannot be done, that is given 2% interest subvention, restructured accounts, additional provisions have been given by RBI, yes, we are making it. You have to comply with the complete conditions of restructuring, otherwise it will become an NPA. Once it becomes NPA, the issue is it doesn't go back to the old date of restructured date. It becomes an NPA on that day. Once the restructuring fails, the NPA, this is one of the big issue which RBI is also asking. The bankers have failed because there is no automation on that. Once the restructuring happens and the restructuring fails, it becomes NPA today. They put the date of NPA as today. This is branch specific. It has to go back to the date of restructuring date. When it was restructured, it has to go back. So that has to be carefully seen. Then disclosures I have already told you. Okay. Rural and agri. Of course, I am not on the NPAs of rural agri and all that. This is the specific, very important item on the priority sector lending, PSL. So this is a issue which all the banks, where the PSL classification is not properly done by the banks. So RBI is pulled up for a lot of issues in that. So that goes on. One activity is cleared, next activity comes in. This issue is there in all the banks which have also audited. So that has the PSL valuation computation, the guidelines has to be followed properly. 21st June 24, there is a FAQs issued by RBI on the PSL lending guidelines. Some of that is the calculation of NBC, adjusted net bank credit. This is again central office. It has nothing to do with the branches. Classification of gold loans, loan to landless farmers 2 lakhs, how it comes to. Then the very important is 100 crores. If it exceeds, any borrower who has got 100 crores can be classified as a PSL. If it exceeds overall across all banks, he has to intimate. And if he doesn't intimate, then he is wrong. And he is coming out of PSL. This is a big issue which we are facing. So we had a lot of problems and a lot of banks failed to do that. Then it has to be reclassified, that they have been removed from PSL classification. Then Udyan registration. In MSME to be classified as PCL, he has to have a Udyan registration. Lot of issues on Udyan registration where the MSME has not at all registered Udyan. He has been shown as a MSME on Udyan and the PSL classification has been given, which is completely wrong. So external agencies have been appointed to find out whether he has got a Udyan registration or not, taking it out. A lot of issues on that which auditor has to sit on to find out whether there is a Udyan registration, whether NPAs identified, whether they have still got NPA Udyan registration. If he is identified as NPA, you can't even go to him. Where is the question of getting Udyan registration? He is out of PSL, automatic. RBI has clarified that. So those things we have to see to remove him from PSL. The NBC working itself will change. So this is again branch specific. We are sitting in central office. I am seeing around 30,000, 40,000 accounts. I have to classify that, find out, take samples and see whether they do that or not. And external auditor is doing a mammoth exercise to find out whether it is done or not. It is branch actually, branch issues. So of course the branch auditors, SBA, within 3, 4 days, 5 days he cannot do it. It's supposed to be a concurrent auditor's work. But that is hardly not seen, because again in the scope they would have not given that at all to him. So that is what is happening. So the issue comes at the central office level. And only the central auditors are pulled up for this issue. A and B C wrongly calculated by the bank auditors have not seen. That is what it is. Because, of course, I don't think there is anyone from RBI. The RBI, they sit there in the head office, of course, due respects to them. They sit in the head office for 20 days, 30 days or something like that. As auditors, we sit there for hardly a week or 10 days. That too, all these departments we are seeing. This is one of the department we are seeing. They see one particular gentleman will be seeing for the entire 20 days this department. He can easily find out. That's the question of time. So you can't pin this to the central auditor. It's difficult. Yes, it can be seen. Not that we can't see that, but what's the time? What is the numbers involved? Very difficult. And you can't do a system report to get that. It's very difficult. So this is the issues we are having. Again, this is a NBFC offloading on lending to NBFCs. I can skip that. Last one is auditors to ensure that banks have proper internal controls and systems in place for the amounts or loans extended to approved purposes and end use. This is what they ask. It has to be seen. So we have to have a checklist as to how this is done, how it has been properly verified. Credit monitoring department. This is the most important department on the advances. Now we are coming to advances. Here, the usual what we see in branches, NCLT proceedings, materiality has to be seen to select the accounts, SMA accounts, RFA accounts, fraud investigated accounts, NPA upgraded accounts, because you would have, it comes to the standard, it is upgraded from NPA, whether it is correctly done. Restructured accounts on DCCO, where it is restructured but standard, whether the DCCO has been done, whether it is given in 2+1, 1+2, 1 year, extended to 1 year, and non-infrastructure, infrastructure 2+2, when if it is a court case. So that is all allowed. The standard, the circulars are very clear on restructuring. That has to be followed. Opening of current account, I will come to that later. There is a separate slide for that. Here, see what happens in a credit monitoring department is what is the files. This can be branch specific also, where how we see the files is very important, because you can't go to the system and take out the reports. My experience is you have to see the borrower's files. You take at least some high value borrower's account. You take at least, because a large 10 crores or 10% of the advances has to be seen for the particular branches. You will see it will have hardly 5 or 6 or 10 maximum. Even a large branch which I am seeing, I am having 40 accounts. That is the max I get. But in other branches and all, it will be very less. It can't be more than 10. So those 10 accounts or whatever it is, you select out from that also. You can see that you have to see the files. Because in the old S4A, you would have known S4A provisioning, SSS, there's S4A provisioning was there, where one particular account on the joint lender consortium, the joint lender allows S4A to operate. Then he becomes suppose he's going to become an NPA, but this S4A will kick in, and if he satisfies those conditions, he will not be an NPA. So for that, one of the conditions is joint lender meeting has to happen today, and that S4A has to be passed in that meeting. So if that doesn't happen, then tomorrow he is an NPA. I'm talking about an account which is more than 1,500 crores or something like that. So the joint lender meeting is given, the meeting is convened today. That is what is happening. So you will not get the minutes, but this was an agenda to be discussed in that they have given to you. Fine, you left it. But what happened is, I went through these further files, next file. I asked him what is going to happen later. So nothing, sir, they said. But no, you give me the file. Okay, we went through the file. There was one communication from one of the banker to the lead banker asking what happened to the S4A issue in the earlier meeting. Please communicate to that. For that, the lead banker is writing to the other banker, copy to us, saying that this was not discussed. It is deferred to the next meeting. That means the next day he has become NPA. Automatic. There is no rules to bypass. He has become an NPA. So only from the record which I see, I know that he is an NPA. So this is coming out of only the accounts. No one gives you. It's not system specific. Of course, SIFR is not there now. That all gone. But I'm telling how important is there to see the files, which gives you a lot of information on high value accounts. I can tell you another example where the interest rate for a particular government account was fixed, and they have eligibility to fix a lower rate if they achieve something. That was agreed, and the amount is very high. amount of advances are all 10,000, 20,000 crores, something, it goes like that, and the rate of interest, you know what is the amount, huge. And the difference in rate is working out to something which the borrower has asked us. This is there in the file. The system calculates the rate of interest which is already fed into the system. It is going on. The year end has come, the quarter end has come, which we verified, and the old rate has happened. They have asked what happened. No, sir, it is the correct rate. When I went through the file, there was a request from the department, borrower asking to reduce the rates. It was not happened. So this is up to the central office to decide. Where is the question of deciding at the central office? Because then they found that the central office ought to have passed this entry, and the amount of interest reversed in that quarter is so huge. It was an embarrassment to the banker that has to be reversed. This has come out only from the file. So this is saying what is the importance of seeing the files to get into it. The system will not throw you. System, of course, the sanction will throw you, but how the compliance of the sanction will not know. So it has to be seen only through the files. So that is important in branch. We have to see some of the files. When I go, I'll ask only the file to come to me. I will never go to the system. System is second. That my staff will see. But file verification is to be done only by me or the retired banker who has got a CA qualification. Only then you will get the issues. Even in that case where I went, that retired banker was found out. He said that it has to be reversed. It was left. Only at head office levels I caught hold of it and we reversed that entry. But he said that he has seen it, sir. I've asked him to reverse. He has not reversed. How do you know? The MOC is not passed. Unless you pass an MOC, how the interest will get reversed? It will be done at the central office. This explanation was given to the auditor, staff, and he has come back. He has not notified me. When this was found out by me in the file, then this issue came up, and then at HO level I made that change. It was a big embarrassment for the bank management that this huge amount of income has to be reversed. It affected their workings. So the importance of file verification is very important. This is just NBFC lending to NBFC housing finance. Then additional provision on restructured accounts that has to be made. Normally bank make this again central office level. We make additional provision on standard accounts. They can make. You see, the provisioning given by RBI on IRAC norm is the minimum provision. You can make a higher provision, but that provision is to be approved by the board. It should be board approved policy to make a provision, and it should be consistent. There should be a consistent thing in making such provision. So then you can make a higher provision. Then next is on the securitization of standard assets, pooled assets. That's a very big issue. We handle pooled assets branch separately. So I have not given anything on that because it is a branch specific issue to be taken up by the central auditor. Legal department, lot of legal issues will be there. So as per AS 29, you have to go to each and every case to find out PPR, probable, possible, remote. This has to be classified by the central auditor in these three categories to find out whether anything is there to make a provision or to be shown as a contingent liability. So this has to be recorded, and each and every item is to be passed the test. We have to record and keep it as our working. Next is the legal fees. So all the expenditure where there is an NPA, legal case is filed, court case is going on, all the expenses is written off to the P&L account. It is not kept in a separate account. It is written off to the P&L account, but the bank has got the right to recover it from the borrower. So it is kept in a separate memorandum account. Like interest is kept in a separate account, but that is charged. But here is the expense, it is expense to P&L account. There the interest income is not charged to P&L. That is a different. So two types of things emerge here. In an NPA, the income is reversed. It is not credited to P&L account. It is charged. But once it goes to the court for the recoverability of that particular borrower, the principal plus interest is shown to the court. Not the interest gets debited to that account. That is how the system is configured. But in our accounts, interest is reversed. Interest is not shown in the income account. It is not in the party's account also. It is a memorandum account. In the expenses, legal fees and all has to be expensed in the P&L account. So that will go off the system. So, but again, a separate mirror account has to be created, and to be shown, this also has to be recorded from the borrower. So this is a separate memorandum account. So different way it has been configured. Use of other SA 620, I don't think this is already there. Wherever there is an expert opinion, we do take expert opinion, wherever there's legal cases are involved, we do take expert opinion to find out what is a probable, possible, remote, from them to decide whether we have to make a provision or not. This happens in all tax cases, mostly all taxes cases. In GST cases, we do have a lot of issues. Now coming to the very important department of recovery, that is NPA. The income on recovery, you have to see the recovery policy. See, banks have different methods. Either the recovery will be first appropriated to principal, or it can be appropriated first to the interest. Both can happen. That is the policy. There is no one has mandated it has to go to the interest first. It can go to the principal also first. So the recovery policy has to be studied to see how it has been adjusted. So unless we know what is the policy, we can't sit in the judgment of the particular entry passed on the recoveries. That is configured by the system, so it automatically system does that. OTS and then write-offs. Then upgrading has to be satisfying the September 2020 guidelines. The master circular 2nd April 2024 is the circular on IRAC norms. That is the latest master circular which is applicable for this year. Every year they have a master circular, master directions. This is a master circular applicable for IRAC norms, NPA, everything. So this is a circular which has to be referred for the audit. In NPA also we make additional provisioning. So again that should be board approved policy and consistency to be followed. Normally PCR is what provision coverage ratio which happens now. NPA on provisioning on NPA is nearly even 90%, 95% in various banks. It's surpassed 75. 70 is the requirement. It has gone beyond that. 76, 80, 90, 95. So gone are the days where NPA is low provided. Now it's fully provided because they want to make full provision on that. And not far off you get the Ind AS ECL provisioning coming into bank also there. But only thing, standard assets also you have to make a provision. But there also a lot of standard assets provisioning is very high, not 0.4%. Various cases a lot of high provisions are made. So even standard assets has got a lot of provisions now. So ECL can easily come to bank now. It was not there for 5 years earlier. ECL, they were very skeptical on ECL because RBI, that is the reason RBI has deferred that. Probably like investments 109 has come, Ind AS 109 has come. Similar ECL also can come to bank shortly. It could come. Willful defaulters, that is one circular which we are supposed to see again. Automation. I am coming to automation separately. This is branch specific again. Automation. So all NPAs are now automated. Gone the days where we go into the bank to see NPAs. Literally, in the top 20 branches which we are seeing, we don't go to see NPA at all. We don't have NPAs at all. We hardly have any NPAs. We don't pass any MOCs, subject to certain cases, that's it. Otherwise, there is no NPA. We don't see NPAs. Because automated, it is automated automatically. And already many banks has got a separate hub. They move the NPA to that particular hub. So you will not have an NPA, even if it is recognized, you will not have an NPA in the year end, except 1 or 2 which will next year it will go off. So that period is gone with automation now. So everything, whatever be the size, type of limits, it has to be automated for asset classification, upgradation, even provisioning. So everything is automatically done. The asset classification rules has to be configured to the system, the entire NPA classification. That is the reason now they are not gone into ECL, because this automation, ECL into automation is very difficult here. Right now it's not configured very clearly because ECL is a judgment thing. You can't put the judgment into that, very difficult. They are configuring that. Anyhow, all NBFCs have already done that. Now banks also can do it, but which is a number of branches involved and other things, quite difficult. That's the reason no ACL has not come here. But that configuration rules has to be put into the system, provisioning norms has to be put in the system. Income reversal is also automatic. You don't touch it. Income reversal is automatic. Downgrade, upgrade also straight through process without manual intervention. Day end reports. The main important thing is day end report. You will have the classification done on the day end report. It doesn't wait for the month end. Once it is an NPA classified, the day end it will be classified as NPA. It doesn't go to the month end. Gone are the days when you do NPA on 30th, 31st of March, 28th of February, 30th of April and all. Gone are the days. It can be even as on 10th March it can be an NPA. So that is a day end process. For example, if there is an account which is an overdue on 31st March, the date of NPA after 90 days will fall on 29th June. So that is an example. So automatically on 29th June, if it is overdue, the system classifies as NPA. So it is the date of NPA is 29th June, not 30th June or 1st of July or something like that. Manual override is possible, but again that is driven by board approved policy, checklist, audit trails, everything has to happen. Then only manual override can be possible. It is to be documented, verified by the auditors, reported to audit committee. Wherever there is a system outside the CBS, that has to read the CBS and update it immediately. So that is why, because sometimes you have the NPA software always coming outside, provisioning and all are outside. So it has to read the CBS and automatically update the CBS. The automation is a real great success as far as RBI is concerned with the banks, but still we do get a lot of issues on automation where the RBI is pulling up saying manually this NPA, this is not flagged as NPA. We don't know why. Where is the gap? Where is the issues? So still we are having problems of not identified as an NPA, which should be an NPA. So there are certain flaws, gaps happening in the system. Flaws I would say, not gaps, I would say flaws. Some flaws are happening, that time it doesn't classify as NPA. So that has been plugged, nearly it is getting plugged. So it has come, but still I would say it is still there. So again, auditor's intervention is definitely there. Wherever you have an issue, please see some samples and keep it in the record as to whether NPA is satisfied. Because anytime there is an issue coming in, you have to give the samples to see where you have done your work, and one-off item which is missed out is not your problem. Materiality, sampling done, and you have to see that. Next is the risk management. CRO, risk officer, this has to be formulated. His role is specified. The very important after CLR, SLR and all, CRR, SLR, this next one is the CRAR. This is the main thing for a bank, capital risk weighted asset ratio. This is a very important percentage, 9% plus 2.5. The risk weightages has to be seen by the auditor. Once the CRAR is coming down, that comes in the very late thing, when hence every department has finalized it, then the CRAR is done. When for that, what are the risk weightage factors fed into the system, that has to be verified by the auditors. I have given a lot of items which goes into the weightage areas. These weightage areas has to be sample verified by the auditors to see that this has been configured correctly and it applies to across all the borrowings. I can skip this except for the last one, which is on the prompt corrective action, PCA. So they have given a lot of leverages. The bank has in 21 itself has been formulated. Tracking indicators have been given, risk threshold has been given for invoking the PCA. This is very important. A lot of banks PCA has been undertaken. Very small banks and other things, they have got into these issues. So we have to see whether this has been properly verified, done, complied with the bank. As auditors, we have to step in and see that. PCA is very important. Coming into LCR computation, this is a small, simple computation, but RBI has pulled all the banks last year for this computation errors. All the banks have been pulled. Huge differences they have noticed that wrongly computed. The problem with the statutory auditor is how to compute, how to verify the documents. Again, the issue of like A and B, C, which I said on agree. The issue here is the volume of data which he is supposed to see. He has to see the entire documents, entire borrower's accounts, to see whether they have been classified properly. This happens at the branch level. Once the KYC is done, the PAN number is updated, the classification of that borrower or the deposit holder is classified at the time of entry as to what he is. Like he is a financial institution, he is this, he is that. That classification, that gives the rate weightage, risk weightage, retail, real estate, all those things. Once that weightage is given, that goes to the risk weightage for calculating the liquidity coverage ratio, that is LCR. What is the liquidity coverage ratio? 100%, that is a benchmark. So anything below that is an issue. So it can be over also, but verifying, giving a very huge figure, 150, 160 or something like that, they found that it is coming down to 120. Such a huge variation RBI is reported in all the banks. They said this is a very huge issues. No one is seeing that. So that is where we found that these were the issues highlighted by RBI. Securities incorrectly reckoned at book value instead of the market value. Outflows are not taken where inflows is taken. One leg is taken, the other leg is not taken. The expenditures, that is outflow, is not considered like bills payable. Other things has been totally omitted. Then classification, as I told you, when depositors are advances, the non-financial corporation, NFC or FI has to be properly configured. Otherwise, it goes into the normal one. There are weightages given different, and hence the ratings, the computation itself goes for a 6. So this has happened. The thing is, the volume is too high for us to see, but it can be done on a sample basis. We can see that we have identified ourselves a lot of issues even on 3 or 4 days. So what auditors we do is we do that even prior to the audit, because this information on the exact figure comes on the balance sheet date. The certifications on LCR and some other ratios are given after the board is approved. Board approves the financial statement. So we can't go and see at that stage. We can't say it is wrong. So it has to be done much earlier. The template has to be verified earlier as to how it has been fed. Whether that once the data comes into it, the outstanding comes into it, the figures are computed. So we go much earlier to see that for that quarter, whether it is still correct. So this has now been sensitized to the branch level, and the branches have been cautioned to give the correct figures. All the inputs entries have been verified. So this is now coming to a very, it is getting rectified. They have identified, the issues have been brought forward to all the banks and branches, so they are getting reduced. So this was an issue earlier. A very important inspection department. This is where all the concurrent audits happen, stock audits, revenue audits, forensic audit, IS audit, cyber security audit, also ICFR. Everything is handled by the inspection department, including the RBIA, their own inspection departments, inspections. So completely handled by inspection department. So we have to call for that details as to what audits have happened, what is the results of it, are there any issues, whether the requirements of audit which is supposed to happen, whether it has happened, any shortcomings in that, auditor has to reply, especially these comes into the LFAR. So complete information has to be given in the LFAR by the central auditor on the shortcomings in this sector. You can see in that information technology governance risk controls assurance practices, which specifies that every IT application of banks shall have an audit trail feature. So audit trail is already there in bank also. So that trail has to happen. So that is also specified. So the auditor can ask for the concurrent auditor's report, whatever reports, and see what are the shortcomings, gaps he can do. But it's very difficult. How many branches we can see? How many audit reports we can see? Concurrent auditors will have 12 reports. But all the banks have computerized their audit. Concurrent audit is now not PDF format or something like that. Completely it's systemized. So any item across the thing you can see. But it's very difficult to get the report pan-India. It's very difficult from the central auditor. So that is the reason we rely on the branch auditors to report on the concurrent auditors report, so that we can pull up from there. Now I am coming to the best practices. These are all department specific. Now issue specific, which a lot of things can percolate to branch audits also. KFS. This again RBI is pulling all the banks that this is not happening. This is just an information given to the prospective borrower about what is the loan is borrowing, what is the rate of interest, what is the EMI, what is the schedule, everything. This is supposed to be given to the borrower. He has to agree on that, sign it across and give it to the banker. And banker should prove that this has been circulated to the borrower. This is not happening. This is the branch specific. This is not happening. So the RBI is asking why it is not done. This is a mandatory requirement. So this has to be seen. KFS has to be given to the borrower. Gold loans, jewel loans, we call it as jewel loans. More south specific. You don't have much of gold loans, pledge of gold loans in north. They don't pledge their gold. So I've been asking about north side, other side and all, what is their issue they are having. It is not there. It is all south specific. You go down south, Tamil Nadu and other things, you have a lot of good jewel loans. The branches will have only jewel loans as their portfolio. You will hardly have even 5% in other north side branches. So this is specific to south, pledge of gold loans. This 30th September 2024 circular is issued by RBI after finding a lot of issues in the gold loans. IIFSL you already know, that is a different one. That is on NBFC. But this one is on individual specific agri loans, jewel loans, where a lot of issues are there. And last year and all, we have seen crores of rupees of borrowers' accounts turned into NPA because of this. The problem here is, in the year end, you have a NPA account, you is shown as standard by the bank. It is supposed to be an NPA. The next month, the account is closed. So what will happen to this NPA if you want to pass an MOC as an auditor? I can't pass the CBS system. This is not manual accounts. I can't pass this MOC. If I pass this MOC, what will happen to this MOC when you want to pass this in April month or May month? You can't go back to CBS because CBS will find that, throw it back to you. There is no such account. CBS will not be able to pass this account. This is a question asked by the banks, but to a lot of auditors, how will I do this if you want to pass an MOC? So don't pass MOC. How can I not treat this as NPA? This is an NPA. So this is a very big issue which we had. But it has to be solved, It's your issue to solve it. You solve it, or write to RBI. It has to be solved. But these are the issues in gold loans and all, everything. The accounts all got closed. Huge. I'm talking about not 1 lakh, 2 lakhs. It's all 10, 15, 20 crores, 40, 50 crores. All loans were closed, but you can't pass this to entry. Next. So MOC passing was a big issue for us. So these were all accounts which were turned into NPA, passed on by the branch auditors. Branch auditors are given this MOC, not me. We had a lot of issues because in all top 20 branches, we don't have any gold loans. Not much, except 1 or 2 branches. So it is all coming from the branch auditors only. They have identified a lot of gold loans issues. They have a wonderful work done by the branch auditors. I will definitely say hats off to them. Beautifully they have given. But all these issues are because of these shortcomings, these issues. The land, LTV not given properly, transparency is not there, auction. These are all the other technical issues. The last one, rolling over. The most important thing is, last one, that non-categorization of gold loans as NPA in the system, evergreening by renewing overdue loans by issuing a fresh loan. So when in one case there was a jewel loan, on that particular day it is closed and there is a fresh loan. So my manager said, sir, this loan is closed. Now he has opened a fresh account. What is the wrong in that? I told him, just give me the time. Date is same date. Give me the time of opening that account and closing of the account. You get that recorded because all our CBS system. The time of the new loan was earlier to the closing of the loan. Time is very clear. That means you have given a loan to close that loan. That is NPA. RBI says it is NPA. You can't give a new loan before closing of the earlier loan. That's all turned into NPA. All accounts have been turned into NPA. So this is the issue which RBI prompted saying that don't do. But this is very difficult because going south, farmers and all are doing. It's a issue specific to this industry. You can't ask the farmer to pay. He cannot pay. He is completely not possible. Where is he going to pay? You have to get it, close it by giving a new loan. This is what is happening. Not only in banks, I've seen in cooperative banks and all. This is what is happening. You can't do that. But now that RBI has come to this, they said yes, we will do it. Only thing what they will do is another loan will be given to the relative of that person and it will come down. That's what they do to bypass this. But now branches have been very cautious now. They are not doing this. They say it is NPA or you pay it off. So that also has been addressed too. So this is a very big issue. The appraisal of loans given to outsiders and all that and all has been brought into it. And now next slide will help. Will tell you what has happened. This September circular, the banks have been addressed all these issues, and they have been asked to reply within 3 months to RBI as to follow up as what has happened on these issues. What is the compliance done by the bank on these issues. They have also replied, because we have seen the third quarter. It is already done. They have complied, and it has already come to a very low thing. But we don't know, because we have not seen the branches. Only the year-end branch auditors have to confirm whether this is completely done. So we are waiting for that. So waiting for the report of the branches for the year-end to see that this has been complied with. So this is what is happening on the gold loans is concerned. Internal office accounts, this is again branch specific. All concurrent auditors, now in nearly all the banks have asked the concurrent auditors to issue a certificate that no accounts, internal office accounts have been misused. A certificate very clearly with the wordings every concurrent auditor is giving to the bank. Every month it has been taken that no entries are passed in internal office account saying this, all the clauses they have put. Unauthorized operation of internal office accounts. So this has been now auditors are confirming. So the concurrent auditors are taking account on, because this was used as a CGL or a BGL to sundry debits, sundry receivables, inter-branch accounts, head office accounts. These accounts have been configured, and what they are doing is they are using it as a parking account. Even that account has been used to avoid NPA. You pass one entry to NPA, credit into the borrower's account from this account and reverse it later. This credit date comes and the NPA is shifted. The credit has come. That's the reason we have a solitary credit should not be considered for treating an NPA. There is already a guideline on that, but still the entry is coming. So the NPA is getting pushed. System doesn't classify. Now it is not a manual thing. Auditors don't see manually. The 90 days norms are computed based on the debit credit. Automatically the system will take from that day to 90 days. So that is pushed. So they are bypassing. This was found out in, I think it was in 19, 20 after the COVID. This was a very big issue that statutory auditors were asked to give a certificate. We said we can't give because I can't go into each and every party to verify that. Concurrent auditors, it was passed to concurrent auditors, and concurrent auditors are now giving that certificate every month that this internal office account is not misused. So very certificate is taken. So as a branch auditor, you have to see whether there was any issue on any internal office account. But now all the accounts have been blocked. No one can open any account, but the transaction in that account has to be verified. No new account has been can be opened because audit committee, the head office has blocked it. No one can open any new account. That is not possible from the branch side. But whatever the operations from the bank account has to be seen. That can happen. So we have to still, that issue is there. Concurrent auditor will reply or seen. Sample basis, the branch auditor has to verify that there is no such issues. MSME Act, again branch specific. 45 days credit. If there is no agreement, it is 15 days. Bank is one entity where accounting of bills vendor system is completely different. It is not there, I can say. At least now it is different. Years before, no vendor system at all in banks. Nothing was there. You get a bill, it will be kept in the drawer. Unless the bill is accounted, you won't know that expenditure. It's not possible. So that was a system, but now accounting has happened. But MSME accounting has not happened because we don't know what is the date, what is the due date, whether MSME rules have been complied with, whether he is an MSME or not, that itself is not fed. So this was pointed out. All the banks have now taken it up. So the vendor system has been configured. You have to see whether it has been properly configured to enter MSME once the vendor is uploaded. System is uploading that vendor into the system. It has to be seen whether there is a MSME registration is not there or not. If it has to be yes or it has to be a no. Once if there is an S, what is the invoice receipt date? We also have a problem of acceptance date. So what is acceptance? What is receipt date, acceptance date? Bank itself is never accounts it first. Then where's the question of acceptance? So it has to be configured. The branches have been, branch managers, everyone have been trained to understand what is acceptance. So it can be the same date or a later date. If there is a reason for acceptance at a later date, put that date. Then what is the due date? So now the system configures, auto fetches the date. It cannot be more than 45 days. That also be fed into the system now. They can't feed 50 days, 60 days. It will not accept. It can go up to 45. So you can put the date up to 45 days. It can be any date. So that option is given to the branch manager. He can put any date up to 45 days, depending on the invoice. We can do a test check as to find out whether he is putting the correct date. That is all we can do. That is again to be done by the branch auditors. Then blocking vendor payment if this is not happening. This also has been done. If the vendor MSME issues are not entered, it will block payment, you will not get the payment. So that also has happened. So auditors have to see this. This is very important because of 43B. You know that issues, and MSME Act is very important. The central auditor has to certify, give a disclosure on MSME. We are at that disclosure end. So we rely on branch auditors, concurrent auditors. All these, they have to report that. Of course, just as an information, medium enterprise is not there in 43B. It is only micro and small. But anyhow, banks have configured for everything, all the three. The hot topic of intra-office accounts, I don't think there will be much in the branch. The reconciliation gaps, provisionings. In the BGL, we have a lot of frauds happening. The RBI is cautioning central auditors to see that, because once in the intra-office accounts you have a debit, a credit, debit is provisioned, credit is not, and credit can go to def account after 10 years, 7 years. That has to be verified, because once it is netted, you won't know where we are. So we have to see whether the debit is provided and balance goes to the def account on the particular due date. So the intra-office accounts is a very big issue. This normally happens when banks have been merged, because per se for a particular bank they know the details, they get it very easily. But once the bank is merged, you don't get the merging banking details. Is very difficult, because that the software is different sometimes, the architecture is different. So that is not given a go by, only the amounts are merged straight away. You don't know what is the date of those entries. Very difficult, highly difficult, very, very highly difficult. So if it is fed into the system, same system, it's fine. But again, that architecture is different and it is given a go by. You just upload that information. You don't go into all the details. For that, you have to open that system, their system, to see that particular branch as to what is the information, what is the date. A very high difficult area, especially on mergers, banks. There they have those issues. And that is still getting addressed. RBI is into that. They always talk about IOA, intra-office adjustments, what has happened to that account, whether provision is made and all that. So this is a very live issue for central auditor. Minimum level of loan component. This is happening mostly on big branches. So the more than 150 crores, then you should have outstanding loan component working capital to be equal to 60% of the sanctioned fund-based working capital limits. So this is one of the requirements where this has been given a go by in many cases. So we have reported a lot of issues where this is not complied with. Now the bank architecture software has been configured to see that this report is fetched. So this has happened, but still that issue can be there, which auditor has to find out, has to be done only on the central office level. Then is the direct selling agent. DSA is centralized. These agents, a lot of issues on the direct selling agents. What is their level of verifications? Auditor has to record those things. So that also has been specified by their guidelines, and we have to see those guidelines to see that they have been complied with. ASM. Agency for Specialized Monitoring. If you will be seeing that a lot of auditors are ASM auditors, that is their internal auditors, sort of internal auditors or concurrent auditors, separate auditors, outside external auditors for a particular borrower, happening only on big cases, big borrowers of consortium accounts or something like that. The leader appoints the ASM auditor. So he gives a report every quarter, it has to come. So this is an issue again. RBI is seeing that the appointments are not happening properly. Waivers are given, the appointments are not, doesn't happen. It's any advance over 250 crores, they have to have an ASM. So this, some regulations are there, like 250 crores. So wherever that is appointed, whether they are appointed, waivers don't happen. If it is happening, what is the issues, whether it has been approved. Delay in reports. What we see in our top 20 branches where ASM is appointed, the delays reports doesn't come easily. All are big auditors. You don't give ASM to small auditors. They have to get empaneled separately. Normally even big fours are doing it. So their report comes very late. So we have a problem that if we are not able to see the report, we see the report 1 quarter or even 2 quarters later. So that also has been addressed. Then what is the reports given by them? What is the ATR on those reports? And whether we take those issues to LFAR and all that. So this central auditor has to see the ASM. The ASM, you will see it is more than 150 to 200 pages every quarter. One particular page can have an issue. We won't know. The banker might have taken that issue, but he would have also missed it. So once we see that, read all the entire page, We won't know where what issue has been taken, because the executive summary is there on whole, overall, fine. But there might be small issues which is very material also sometimes. So that only we will be able to tell as to whether it is material or not. He would have just given somewhere. So that issue, because it's on the operations of the particular borrower, the ASM would have given some issues. That could be material also later, because the banker has to be warned that this is an issue. Because again, these are all the auditor's perspective, where we can give as a value addition to the banker. Not that banker wants to avoid those issues. He may not know the importance of it. Only as an auditor we will know, because our 120, 200 pages report, they do see it, but it's very difficult to comprehend in one time. Every quarter they are getting how many ASMs will happen, reports will come, 10, 20 ASMs in a particular branch. It's difficult for them to see. Of course, zone regional officer and all sees that, but again they could miss it. So this is where concurrent auditors have to see that, branch auditor has to see that, and the central auditor also has to see that, as to what is given in the ASM, whether something is there which is an early warning signal for the particular for the banker to consider. It is our value addition to the bank. So we have to report that. We have to see that. This is one specific issue which we saw in one case where TDS, see, the bank has taken over the property of the borrower, and they have sold it. The capital gains has happened. The person who has bought the property, he has to deduct TDS. So TDS is on whose name? It has to be on the original borrower. But the name as we are the sellers. Banker is the seller. So they have given the TDS in the name of the banker. Who is to take the TDS credit is an issue. Neither the bank is taking the credit, because once you take the TDS credit, the capital gain will be faster onto you. It is not your capital gain. But if the TDS to be taken by the borrower, the original owner, he doesn't have knowledge of it. It is given, the information is given, but we are not even able to track the original owner. It has been given, but it doesn't go to him. How does he take the credit when the name and number is, the PAN is in mine, PAN is given in bank's name? This has happened. A lot of cases are there where the TDS is missed by both the people, no one claims it. So this is also happening. Of course, this is again central office level. This issue is there, but it is given a go by. No specific reply, no specific answer can be given on this. This is very, very important. It can be branch specific also. Maximum permissible bank finance, MPBF. This is IBA has issued the circular. You can't get it in RBI. This is a very old circular. So once a working capital limit is fixed, there is a creditors value is also fixed. So any value up to creditors that is already gone into the working capital finance. So you will see a stock statement without creditors. Once you say that, sir, creditors has not been reduced, the immediate reply will come from the branch manager saying, sir, MPBF. Creditors have already been, the working capital has been valued at the time of sanctioning. So that is the limit. If the value of the creditors goes above that value which is fixed at the time of assessment, then that amount is considered as extra. Otherwise, till then they are not considered. This is one of the methods. So you could have a branch where this is followed. Of course, this is there, but sometimes they don't follow. They take the actual credit, the actual book dates, receivables are taken, and this is done. So this is also an issue which has to be seen. Once this reply comes, then you have to go into the circular, whether the policy is there like that, whether the sanction is given like that, you have to see. Then creditors, whether to be reduced or not, has to be seen in that case. Otherwise, creditors has to be reduced automatically. Yes. Otherwise, this is also an issue which you might encounter in some branches here. Very big branches. Other small branches, they don't follow, they don't know that also. But some big branches, corporate branches and all, they do have this policy. And you have to see what is the sanction says. Then this has to be followed. This is completely on that. Then small issues. You go to the trial balance of a branch, you will have receivables, sundry receivables and all that. You see why there is a sundry receivables parked in that, because what happens is a lot of advances gets parked into it. And maybe there are some bills to be accounted when it goes to the capitalization also sometimes. But by my mistake, they said, no, sir, once the retention money is paid, then only you'll account it. It's not possible. Once the account is done and the payment is made subsequently in the next month, it has to go to the capitalization is normally missed in these cases, SR sundry receivables cases we have seen. So please refer to SR sundry receivables to find out whether entries are passed and that account, whatever is there in that account is correct, that it can remain in that account. There are a lot of issues are happening in branches. When we go to the branches, we get only these issues. You see the trial balance, you can easily see this. Just ask for the details, they'll give you all the details. Then you can determine what is there to be there. Hardly you will have 5-10 entries in that, not much at all, even in very big branches. So you can see that. Very easily you can catch it. Opening of current account, this is one circular. Of course, it's in big branches where you can't have a current account when you have a loan account. So that is there where it is in less than 5 crores, you can do that. Over 5 crores, you can't have it. If at all you want to have it, it can be done where there is a 10% aggregate advance is there in a particular, we can have it in one bank. Or if the 10% aggregate figure is not there in the bank amount of total figure, you can have it in any one where it is higher figure is there. So you can have it in only one bank. If you have across, you have a lot of banks. Only one bank you can have it, not in all the other banks. So this is multiple banking is possible, so it's possible. So that we have to see that this is current account opening has to be followed. Then instances of BGs and LGs, this will happen in branch level. Lot of expired BGs, LGs are there. This will go into the contingent liability of the bank, unnecessarily pushing the contingent liability of the bank where claims have not come. It's difficult to close because unless you get back the BGs from the person, you can't close it. So this is an issue. We have to ask the branches to see to get it fast. Unless the other third party cooperates, we can't do that. That is correct. But unnecessarily contingent liability is boosted. So we have asked bankers, auditors have to ask to see that it is getting reduced, or report has to be given that this is expired, claim has not been received, this has to be closed fast. This is one of very interesting case where deposit master for nil rate of interest. We have seen RBI informing central auditors that they have done a complete check of deposit balances, come out with certain cases where the deposit rate is 0. Means no provision is made for those deposits, which is outstanding. This has happened. So we do a test check in every branch we visit. We do a test check of the interest rate of interest master to find out what is the rate of interest, whether there is any such 0 interest. That means the provision is not made. Provision is bypassed. Lower provision. This has happened. How it has happened as 0, we don't know. That was a policy fed into the system that it gives 0. It's overdue interest. Overdue interest, at least SB interest has to be followed. Matured interest, matured deposits. So that there was some issues where it has become 0. And the RBI is pointing out to us that it is 0. Why you are not seen? Why you are not reported? He is asking the central auditors why it is not done. It is very surprising to us. Again, we have to run it. We have to sit in the system and in the pan India we have to run the system and see what is happening. So the branches also, you can do a test check to find out there is no issue in your branch. You are safe from that level. Because heavy value, if it comes in one branch, auditors will be pulled up. First the concurrent statutory auditor, then the branch auditor, then the concurrent auditor. All the 3 will be pulled up. So this is what is happening. So this is one issue which we have to see. Now we have, as far as stock statements things are concerned, you have CARO also to refer in big borrowings where CARO reporting is to be given, where quarterly returns, whether it matches with their books of accounts. So we have seen so many cases where auditors in CARO, they have qualified saying that it is not reconciling. And they are given in table. What is the figure as per the stock statement to quarterly returns to the banker? What is the figure as per the books of accounts? What is the difference? They have even tabulated. I've seen in many cases, big corporates, not small. Of course, there could be a reconciliation. Then we ask for the reconciliation. What is the reconciliation? Why there is a difference? So this is an area where every branch also can be seen. Once you get the ABS. So that is what we say, that once you enter into the branch, ask for the latest ABS. You are going to see only March 24. ABS 24 is to see first thing, go into the ABS, see the CARO report. If there is applicability, they would have given that in the CARO, number 1. See the stock statement of March 24, compare it with the ABS balance sheet, stock statement and book debts and creditors. It will be invariably different. We have seen across in all the places. If the inventory is shown a higher figure in stock statement to the banker on March, it will be at a lower figure in the year-end stock statement as per the audited balance sheet, ABS. Why? They have to give explanation. We have seen in some cases that DP itself has taken for a 6 ride. DP itself is low. Immediately the banker says in April, May, June 24, the stock statements are okay. But stock statement is what he is giving. That is not tallying with the ABS. ABS is audited. Then immediately what we do is, once that is not doing, we'll see the latest stock audit report. If at all a stock audit report is there. August, September, October, the stock audit would have been conducted. See the stock auditor, whether he has qualified, whether he has given the DP. In that case, be satisfied with that, at least that. If that also is having a problem, of course they would have taken. But in many cases, there is no stock audit report because they don't comment on stock audit. But ABS is having a problem. Then how will I rely on the stock audit statement given every month? They don't comment on CARO also sometimes. Report is not there in CARO. Then what you will do as an auditor who is going sitting there, this is happening, and then how do I release the monthly stock statements? This is an issue which we have to see as an auditor, branch auditor or a central auditor who is seeing the branch. We have to see that this is properly done. Very important, because you will never get the March stock statement. By the time you go for the audit, you ask, while coming out for signing, it will not be given to you. You have time specific. You have only 3 days, 4 days time to do the audit. As a branch auditor, you will not get it. So that is very important. At least on select parties, higher value items, large advances, we have to see that stock ABS, because ABS is reported in the quantity, the data given in the large borrowers accounts. ABS is completely entered. There they would have entered it. So the ABS, they should have the ABS, but the stock statement they don't enter. They don't give that date. March 24, you are already 1 year late. You have to pick out that stock statement from the old files. Branch has to give you. It's very difficult for them to pick it out. But all the stock statements will be in one file only. It's supposed to be given to you. You have to see that it is properly tallying to the ABS, or details has to be given. The auditor of the the entity borrower will come and clarify why there is a difference. Common facilities, multiple facilities, common securities. This is another issue, but I think in most of the cases it has been rectified, but we still feel that some cases was there. What happens is in NPA accounts where there are multiple facilities but one common security, then that common security has to be apportioned properly to all the multiple facilities. The system apportions it on a particular fashion. So now they have configured that in the system, but certain gaps are there where the facilities are wrongly entered. It's an entry. You have to enter the security value. So once the security they enter one value, then immediately multiple facilities, it may take that value into that. It may it may even go for lower value, or it may give a high value. Both will happen. So this has happened. We have seen like that. So this has to be seen very clearly. Once you go to the bank where there is an NPA, two things definitely has to be seen. The date of NPA. It has to be seen because once the date is fixed, fresh NPA date has to be seen at that time when you are the auditor. Once you fix it, it is never going to be changed till that account is closed. Next year auditor is not going to come and see that date. He says that auditor has certified, why should I see it? So the date of NPA in that particular year which you are going to audit, that date has to be seen very clearly, because if it is right, fine, that that is going to be the date. Wherever it is restructured, you have to see whether what is the date, because it could be an earlier year. So please see that. What is the date of NPA? So date of NPA is very important. Value of security is very important. What is the value of security? Whether it is multiple, okay, fine, this issue is there. Otherwise also, what is the value of the securities? NPA has got, you have got 2 years, 3 years norms, it has to be valued, otherwise it is zero. It has to be brought down. Inspection, RBI doesn't accept the value. So it has to be revalued. But even then, what is the value? Sometimes I have seen vehicles put as value. I have seen stocks put as value. What is the stock you are going to have in an NPA case? How you are going to enter it and take it out? And what is whether the stock is available? No one has seen. No stock audit is there. No one. If it is verified and an auditor has given a certificate, take it. Just because a stock statement was given by the NPA person, you can't take it. So you have to see that it is audited or someone has verified it. You can't take it. You have to put a zero. Stock value, you can't take it. Machineries. How do I know that machinery is there? What is the depreciation on that? So it has to be brought down. Machineries might be there, they are verified, but what is the value? It has to be brought down. So those things has to be verified. So valuation of security is very important in an NPA case. It will differ every year. It can't be whatever you have entered on the date of NPA cannot be finding it every year. It has to be verified. Wherever is NPA, these things has to be verified. That is where provisionings take a issue on that. Restructured, I have already told you. Window dressing, this is always there. Every branch has got that issue. The deposit is inflated. advance is inflated by passing one entry to another entry. So why this entry was passed, we have to see, because it could be reversed. It is normally reversed within 1st of April, 2nd of April, 3rd of April. It is reversed. So why? You will get a document is sometimes available saying that he wanted, sir, we gave. Next time there will be a letter from that, I don't want it, please reverse. This will be the document, you will get it. How we will rely on that document? He is asking for a facility. Next day he says, I don't want. And this loan on deposit is a classic issue. I take a loan. Next day he says, I don't want the loan, close it. This is the way you can inflate. RBI is very specific on that. In 21, they have instructed all the banks to please go into this window dressing and see to it that it is not done. Take staff accountability into this. So all the issues are taken, and the inspection department gives to their particular vigilance or whatever it is to see the investigation on that to find out whether any staff in accountability, staff issue is there, whether he is to be taken for task. So this is happening. But window dressing, wherever it is happening, we reverse that entry. We have to reverse. Banks are all doing it, that they don't allow this to happen. This is a very big issue. Again, branch specific only. I can see 10 lakhs, 20 lakhs, 30 lakhs, 50 lakhs, 1 crore, 2 crores, 3 crores, just an entry passed and reversed. We even asked one step further. This is done for a particular same borrower. Can it happen in group accounts? Of course, income tax issue is there, different PAN. But can it happen in group accounts? We have asked some banks to study that, and even that they have to implement. We have gone one step ahead also. That is not yet approved by RBI, but it could happen in some time later. Business coverage, as for branch audits, how much branch audit is done? Now it is to the discretion of the bankers. Earlier the percentages also were there, now it's a discretion of the bankers. And what is the percentage of audit to be completed for statutory auditors? That is there. So apart from our branch coverage, 20 branches, the total coverage, whether it is 70, 80 and all that is specified to the central auditor, that whether coverage is there is what we see. So the banks allot branches to branch auditors to see that percentage is achieved, that's all. But there is no specific ruling has been removed. The another one is divergence. Okay. See, the issue is this is to be disclosed in the balance sheet, notes to accounts. What is the divergence noted by RBI on the audited thing? That is additional provisioning of NPA assessed by RBI compared to the reported provisioning. If it exceeds 5% of the profit, of the 5% of the profits, the additional provisioning is more than 5% of the profits, then it is a divergence. Gross NPA is identified over 5% of the reported incremental gross NPA is also a divergence to be reported by the bank in their report. So these things are taken up for asking the central auditor as to why this has happened. So internally they have their own yardstick to pin issues to the central auditor. Disciplinary actions can be taken on the central auditor. So it can percolate up to branch auditor level also. But I don't think any branch auditor or concurrent auditor has taken up. Only central auditors have been hauled up. In this happens, it happens for a particular branch. It is not at a central office level. It happens for the particular. The second one is specific on some branches. So gross NPA, because it identifies on a branch levels also. What is the percentage deviation? That only happens to this issue. Next is just on the reports. ICFR, this is now gaining momentum. All branch auditors, this is again branch audit specific. Of course, I am adding something to the central audit also. But ICFR is given by branch auditors. So this is given. Adequate internal control systems are in place and operating effectiveness of this control. This is what RBI wants the auditor to certify. So we go with the guidance note issued by ICA on that. So there is a policy. The ACB fixes what are the RCMs. It is control matrix. RCMs to be fixed. This is a ACB fix this, and central auditor takes into account these ACMs, RCMs, whether it is okay. This is percolated to the branch level. The branches takes these RCMs as given by the bank, and highlights what are all the RCMs, how it has been complied with. This routinely happens right from 21 onwards. It is happening every year. I think 22 or 23 it started. 22 I think it started, and ICFR reports are coming in from the branches. The RCMs has to be periodically evaluated. That has to be seen. That is not very much happening, but in some cases it happened because they have increased the RCMs to more departments, more issues, more items have been added to the branches. In some cases, some banks have done it, but some other banks they have not done. So that is also an issue which central auditor has to note it down. The RCMs can be fixed taking into materiality applicability. Then what are the RCMs where auditor, branch auditor has identified deficiencies, how it has been mitigated. And as far as central office is concerned, what are all the RCMs given to select branches, whether that RCMs to those branches are applicable in the current scenario, whether it has to be updated, has to be seen. So it can't be in 2022 you have fixed it, it can't run as it is today, because something it may not be relevant also, or a lot of more things has to be added depending on the scenarios which has changed now. A lot of digital banking and all has come, so RCMs can be different now. So that has to be evaluated every year or once in 2 years. It has to be done, and the RCMs has to be changed. What is happening now is on the departments. Okay, that is on the branch level. Central auditor, what he has to do? He has got a lot of departments. The departments also has got RCMs, and now RCMs has to be prepared for each and every department. Inspection department, fraud department, vigilance department, risk department, accounts department. Everyone has to have an RCM, and that has to be certified. The testing has to be done. So normally we ask the testing to be done by an external auditor, and we get the report, and the central auditor has to give the ICFR report. That is what is happening, because statutory auditor cannot go suddenly and do an entire RCM for all the departments in one go, because he comes after April. What is to be done after that? He will spend the time only on the testing. So that cannot happen. So it has to be done by an external person well before March or immediately after March, so that while the central auditor is coming, he should have the testing report with him to find out what are the gaps and whether it has been mitigated, then what is his report on that. So that has to be seen. As far as RCMs, ICFR report. ICFR report from the branches, we have seen very peculiar replies, because once there is one issue in one particular account, they have completely said qualified that it is failed. See, the auditors have to understand what is the control issue and how that report has to be given. Once the report is qualified, I have to say that this branch is completely qualified, the system issue. One issue I can point out saying that the stock, the renewal of an account has been mentioned manually in the system without obtaining documentation. This is one of the very big issue. In fact, it is branch specific again. See, renewal has to happen within a year. Once you get the documents, you get the renewal. So you have time limit fixed by RBI for renewals. So we have to bypass. You can do a short review and all that. So to get away with that, the branch puts the date as renewed. But what is the supporting document you have got? Nothing. So he has fixed in one particular account. In fact, that is an issue, right? It has happened in only one account. He has returned saying that this branch has a control issue, that there is no document, but all accounts have been renewed like that. When we went into that, that is a control issue. I have to qualify. As a zone auditor, I have to qualify. It's a very big issue. Our entire branch is one of a very big branch. He has qualified. If that is qualified, then what will happen for the control issue? I have to give us a control issue in my ICFR also. So then we went into that branch and asked, what is the problem? The branch manager coming say that has happened in one account, sir, not on all cases. That's only one account he has. But then who is to say that it is one account or how many accounts? Am I to go to the branch and see entirely that re-audit it? How do I take the assurance of the branch manager? How do I see that? I have to get in touch with the branch auditor to find out whether it is one account or many accounts. Then he confirmed, yes sir, it is one account. Then we saw that it is one-off issue. He can't qualify as the branch as a whole. So that is the problem in this ICFR reporting. It has to be specific, control issue, which is material, happening everywhere. This issue he could have reported in LFA and left it, not in ICFR. I mean, the way the auditors understand with the time involved with their study, what they understand is very important. Coming to head office level, then we have an issue. So the head office says that they have received 300 qualifications in ICFR and found out at least 10 to 15 only is a qualification, rest are all wrong. Completely they reversed it, saying that's wrongly reported. There is a report, but that is not a control issue in ICFR. Completely reversed. So what as a central auditor we have to do is very difficult. That is the reason we talk to the branch auditors in the year end to say, sir, this is the issue, please see that, this is what you have to report. So we are going to the branch auditors saying this is how we have to report. Whenever you have an issue, please talk to the zone officer or the central auditor who is camping in that particular place. One central auditor for that particular zone is there. We have given those details also. The branch auditor can talk to the central auditor. Sir, this is an issue, can I report like that? If he doesn't understand, he can talk to him. Because once he gives the report, I can't go and reverse that report. This is an issue. So why I am saying this is, last year, RBI has specifically selected some central auditors. I don't know why they selected certain central auditors. They have picked one or two from the particular bank. If in my case there are 5 auditors, they have picked one auditor or 2 auditor. Like that they have selected, they have seen that all the banks are covered, but they didn't go to all the 5 auditors. 1 or 2 auditors they have picked up for each and every bank, and they sent a big questionnaire. RBI sent a questionnaire on ICFR asking what is the policy, how it has been done, what is the reports you have received, how that has been mitigated, what is the reply, what is the steps taken. Big questionnaire, around 10 to 15 questions. And the auditor, as a central auditor, I have to give a reply. This is not an audit. This is not a quarterly review audit. It is not a year-end review audit, but there is a questionnaire from RBI and I have to reply this questionnaire. It's a separate questionnaire. So RBI has got all the powers to ask the central auditor anything they want. They can do that. So this reply we have to give. That time we went into all these issues. Then only we found out that this RCMs has to be redrafted, understood by the auditors, branch auditors. At central level, we ourselves have to have more issues plugged, policies redrafted. Then only we understood. So this ICFR, RBI is now waking up. All the 2 years, 3 years, blindly auditors were given ICFR. Of course, with due respects, I can say that everyone, even central auditors, we are blindly giving ICFR because it becomes a checklist sort of thing. It's to be on the control issues. We have to do the RCMs and give a control issues properly. Of course, I don't think there will be a very big control issue. There could be here and there issues. There won't be a big issue, but only thing we can percolate to the banker to be careful on certain things. That is all we can do. It's not a question we have to qualify ICFR. It is not that required. There is no such issue in the bank that ICFR is to be qualified by the central auditor. But lot of things are there. That is what the RBI has also asked. They didn't say why you didn't qualify. They say have the issues come from the branch auditors on ICFR, how that has been mitigated, have you seen this? That's what they asked. Have you seen that? What is the step they have taken? They have taken. I won't say they have not taken, but what are the issues and then how it has been mitigated? That's what they have asked. We didn't see that. So that is what everyone have to see that. So the branch auditors has to be very careful in giving ICFR, which will be taken up by the bank. The inspection department is very careful. They are taking into, even the entire branch is verified, and that the control issues are clarified and closed. We got a report that the control issues have been clarified, closed, verified by the concurrent auditors. Not that the banker does it himself. Concurrent auditors have clarified that all the issues have closed. That is what is happening. So that is very good. The bankers have understood what is happening, how it is to be done. Once we tell them, they are doing it, the bankers, but we can't just leave it, then they will also not know. That is the problem. The bank, our duty is also value addition, not only audit. We have to go to the bank and say this is to be done, this is to be done. They do that. So now I got a complaint. I can go to the RBI saying, yes, it has been complied. So now, but it has to come up every year. So we understood what are the issues now, how to have our working papers correct. We have done that. So this is what we have to be very careful. LFAR is for the branch auditors, separate LFAR. LFAR for the bank as a central auditor is different. It is highly process oriented, compliance is oriented, reporting of lot of issues, how the bank is performing. It's a very big detailed LFAR, department wise LFAR. So what we do is, whoever is seeing that particular department, the department will give a reply on the LFAR issues as enumerated in the LFAR. The department will give the replies, what is done this time, what is done last time, or how it has been verified. The statutory audit, central auditor has to verify this replies, and he has to formulate the reply, final reply, which is to be given in the LFAR to RBI. So every department wise it will be verified, drafted and consolidated, and one LFAR will be prepared and to be given to the RBI. So it has to be done before 30th June. So this happens after the year. That's the problem. See, because once we don't do it in the year end, you get lot of issues. I've seen in the earlier years that in LFAR, when I go to the branch, because I'm seeing the branch LFAR only at that time, someone would have said you should have passed this entry. This entry is not passed. What you will do now? I can't do anything. I have to just ignore that entry, that remark. So like that it has happened. So of course in branch we have gone to the branch auditor saying don't give all those MOCs and all in the LFAR. You have to pass MOC only. Don't put it in LFAR. So that entries in furniture fittings, depreciation, this, that, some issues, invoice accounting and all, that is not done, he will say in the LFAR. So now as a zone, when we go to the zone, we are supposed to see the LFARs of all the particular branches of that particular zone. There itself we see all the branch auditors report, and wherever there is an issue in LFAR also we are supposed to see. It's very difficult because we have to see the TBs in balance sheets of each and every branch consolidated to the regional office. The audit reports of each and every auditor has to be seen. Whatever MOCs he has passed, we have to see. Whether NPA is identified by him, we have to see. Whether it is rightly done or not. Whether further NPA is coming, we are also supposed to see. We are not left with branch NPA, branch auditor's classification of NPA. We are supposed to see whether anything further has to come. Of course, we can't reverse it. We can enhance it. It's possible. These are the things we have to see. Now we have to see the LFAR also. Each and every line of the LFAR we have to see wherever he has reported. Anything which we are of concern, that has to be seen, and anything which has got an importance, which may have an accounting implication, has to be seen. Because once we miss it, we can't do it later. But that will get caught once we do a combined LFAR. Because all the LFAR branch auditors has to be combined. As an annexure we have to give. So that LFAR has to be done later. So the bank, RBI is questioning why control processes, which has been highlighted earlier, is not coming into the consolidated LFAR. All central auditor has to be very careful when he gives this thing. So we have to do a lot of study. We have to work on that. Give the working papers. Keep working papers as to what we have verified. What is the policy of the bank? How it has been formulated? How it has been complied with? Everything has to come. LFAR is very big book. It's a book. Something where we have to completely see it and give the report, because RBI is questioning only on that. He says this is not followed. That is not followed. Everything is coming in LFAR. So this is a very big place where we take at least 15-20 days after the audit, before 30th June. Actually, banks have their own date of finalizing the LFAR to audit committee. That is internal. RBI has not given any date, but with 30th June they have to give it to RBI. Anytime you can do that before, but some banks have prescribed what is the date by which it has to be mandatorily given to ACB, like 1 month after the board meeting. Finalization of accounts, it has to be given to the ACB. That is very specific. They have done, some banks have done. So before that we have to sit, and we have only 30 days to finalize that LFAR and give it to the audit committee. It is to be submitted to the audit committee, which will be finalized with the action taken report. It will go to RBI. This is third one is on the certifications. This is central office specific, where we also give a lot of certificates. Every department we used to give the certificates, but it is internal purpose. Sometimes it is internal purpose, because one certificate is relied on by the other central auditor. So that is one where UDIN is not required, because it is only internal. We do give certification to RBI. Each and every department has to give a certificate like CR, AR, LCR, a lot of things certificate we have to say. That is to address to RBI. Then we have to follow the guidance note on reports of certificates for special purposes. That has to be followed, and we have to give the certificate based on that. Now SA 600, hot topic, SA 600. So we have to, principal auditor has to obtain SA 600 for the adequacy of the branch auditors. Central auditor has to issue a letter to branch auditor asking for the certificate. He has to pass on a lot of information to him, like materiality of the bank as a whole and what is expected out of from him. So this has to be given to the branch auditor. It is done by all the central auditors will give to the branch auditor. The branch auditor has to give a SA 600 letter, which is always forming part of an audit report. Once the audit report is given, this also forms part of it. All branch auditor has to give this SA 600 letter to the central auditor, addressed to the auditor. This gives a lot of things, confirming the receipt of instructions, conduct for the conduct of the audit, whatever important information which the branch auditor wants to give it to SEA, that has to be given. His independence requirement, that he is independent, the branch auditor is independent, has to be stated. CAM, because we do give CAMs, so branch auditor also give anything which is of importance on CAM. Whichever he wants to give it as a CAM, he has to give it, whether it is there. If it is not there, he has to say nothing to report on CAM. IFCs has to be, he is anyhow certifying the IFCs. Performing the procedures as per the guidance note, he has to confirm that he is aware of the guidance note of ICA and he has performed the procedure as per that. SQC has to be confirmed. Materiality level, this is what I said, branch has to give his materiality level. Any other important matters, then his engagement team, he has to comment on his engagement team. As far as central audit is concerned, the revised SA 600, that is a big topic where we have to see the working papers of the other auditors. That fortunately NEFRA communication on 12th November said it is not applicable to banks. Right now we don't have that issue that we have to come to the branch auditor and get their working papers. That is not there. That is left to only corporates. I think few slides I'll complete with that. Is it okay? No answer. This is on the financial statement presentation as the central audit is concerned, Annexure 2. Only thing you can note down, these accounting standards notified under the company's accounting rules 2021 has to be followed. Annexure 3 is the notes to accounts, which that has been specified. A lot of information is there that has to be followed. Then consolidation is Annexure 4, just as an information I'm giving. This is a central audit. Whatever is the format for branch audit and all that is different, but this is the central audit branch standalone consolidation specified by RBI. First one is not recognizing exchange gains for repatriation from foreign branches. That is okay, not to recognize that. Next one is very important, unhedged foreign currency exposure. So this is also branch level also is there. We have to get the declaration on quarterly basis. CA certified once has to be annually obtained. So this, wherever this UFC is there in a particular branch, please see to it that it is done. At least once in annually a CA certificate has to be obtained. This annually we are considering at central office level. So this is very important for us. Otherwise we have to go to the branch, ask them to give these details. We are doing it at our level. This is again at central office level. Anything more than 1% of the total income and other income has to be shown separately. Again, other liabilities, provisions, other assets, again 1% of total assets should be shown separately. IBA credits over 5 years should be in blocked accounts. Special reserve DTL has to be created as per the institute formula, institute guidance. Special reserve has to be created on DTL. DTL has to be created. Window dressing I've already discussed. Now central auditor has to consider in his audit report. I'm fast tracking on that. He has to give CAM, he has to give EOM and other matters. Only one observation in EOM, if you can see in a lot of listed limited reviews, you would have seen that audit committee is not there. In many cases, independent auditors or independent directors are not there. So audit committee is not constituted. There is an EOM by the auditors that the accounts have been considered by the board instead of the audit committee, because audit committee is not there. It is in violation of SAB LODR. So that has been given as an EOM. This will be followed in banks where it is not there. This is a CAM. So we auditors, central auditors have to give a CAM. Normally this is what is appearing in CAM: advances and investments, the test of control and substantive testing, how it is done, that has to be reported. IT system assessments, that has to be given. Litigations and contingent liabilities also are given. And in some cases deferred tax assets are given. If you can see the reports, it's very clear. I just picked up from various banks. At least advances investments are followed everywhere. mostly by IT systems, but litigation some give, some don't give. Of course, deferred tax they don't give because deferred tax are recognized based on the provision for bad debts. It's quite huge. You can see that even EOMs have been given by, if you can name Canara Bank and all, they have given EOM. That this deferred tax has been considered as a EOM only. We are not qualifying it, but they have given the figures, very huge figures. So that is a deferred tax asset recognized by the bank. So they are skeptical on the figure, but not qualified. That has also been given as an CAM as to how they have satisfied that there is no qualification on that, and they are satisfied with an EOM. So not all banks, but some banks like Canara Bank have given this. So this CAM is a perspective of the auditor. He has to, wherever he finds that there are some issues, to go to CAM. He has to keep working papers on that to decide. This is same as in all other corporates also. Bank also is in that. But bank has got certain areas, not like companies. So what are the areas which we need to add and give is a professional judgment of the auditor. This is what totally given in all the banks. MRL. As MRL, I don't know whether branches gives MRL, but some certain bank branches give, certain don't give. It is left to the bank's policy. As central auditor, I can't do anything on that. Do get MRL in branch, but central auditor gets the MRL on the financial statement. It's the same MRL as specified by the institute guidance note. We are not deviating anything from that. We take the MRL on financial statement. ICFR also we take an MRL. On specific issues like DTA and all, the concerned department auditors, they will take from their end. It's not necessary you should put it in the MRL addressed to all the auditors, because the MRL is addressed to all the joint auditors. Specific issues you can have your own MRL and you can keep it as a working file. It need not be go to the other auditor, because they will not understand what for it is taken, what is the issue involved, how it has been solved. Otherwise he has to record all those things. He can say that is a department specific for that work allocation of that auditor. So he can take a MRL on that and keep it in his file. So that has to be taken. We do take it. So to sum up, what is the key issues which our central auditor will be seeing on the perspective of RBI? All the ratios, CRR, SLR, CRAR, LCR ratios. This jewel loan is an issue. PSL, priority sector lending, PSL is seen. Automation, NPA automation is seen. These are the main areas where RBI is always on that to see that it is properly done by banks. So this is for as far as the where central auditors has to keep documentations on those areas. Even LCR working or the SLR working, CRR working, you have to have the working papers as to how we have verified. Because even that computation, how it has been done, even institute guidance note says that you have to have the workings on that, not that we have to keep it from RBI perspective. Institute guidance note says you have to keep the workings. So this is where central auditor has to keep a lot of workings in his files, even department wise. That is why the departments are segregated to each and every auditor. The workings are very important that we have to keep, because we are subjected to quality review, we are subjected to NEFRA also. I have done both, I have got both. Luckily NEFRA has not given any inspection report on my case, so I don't know what NEFRA wants and what they do on banks, because we know a lot of reports. You would have seen NEFRA reports on corporate entities. I have not seen, I don't think any inspection report has come from NEFRA on banks till now. Even in my case, NEFRA has not come back. We have submitted, but they have not come back. So I don't know what they will ask, what they will, what is their perspective as far as bank is concerned. This what is quality review has happened. Quality review is that particular auditor's perspective. So we have I've asked other quality reviewers also, colleagues also, as to what their quality reviewers are asking. Normally they go into the computation workings, the EOMs issued, the key audit matters, CAM, how that has been given, what are the documents you have, and in some cases confirmation of balances. So as a branch auditor, you are expected to have confirmation of balances on what? Please don't ask me. See, the borrowings you are going to have 5,000 to 10,000 borrowings, or even 1,000 to 2,000 borrowings. You are entering to the bank on 2nd or 3rd of April, and a branch auditor has to finish the audit at least by 10th, not later than 10th, definitely. So in 10 days, you are going to have any confirmation of balance. Who is going to give you? And this is a qualification by the quality reviewer on a branch audit, not on a central audit. So he has qualified. So see, you can take the confirmations. You can't take the confirmations from the borrowers. Okay. Then you can record the alternate audit procedures you have done. So we do that. So wherever the balance is not confirmed, it is not confirmed definitely. So what is the alternate audit procedures? The guidelines itself says, the standard itself says you can have alternate audit procedure because there is not possible to get confirmations. So take alternative. Unfortunately, the guidance note says you have to take confirmations. He is referring to the guidance note. Guidance note says you have to take confirmations. Okay, here I can't take a confirmation. I can go to the alternate audit procedures. What does the alternate audit procedure says? You can see that every current account or every CC account, if it is not confirmed, this is taken as confirmed. That is what you confirm, not confirmed by the borrower, not replied by the borrower. It is taken as confirmed. That note is always there in every statement. So that is an alternate audit procedure. And I have verified that party, and subsequent I have seen whether he is an NPA or not. So I am seeing that account very clearly on large borrowers. I am seeing that account. And what is the interest application, everything I am seeing. And subsequent entries up to the date of audit, I am seeing that whether he is okay. That definitely this is seen. So you have to record that. So once that is done, the SA 505 is clear. This this is the reply the auditors can give. So we have recorded that, and that was accepted by board. They dropped that qualification by the reviewer. Quality reviewer has qualified that, but that was accepted by board and they dropped it. So this is the documentation we have to keep. It's not very easy. Once a QRB comes, see the QR can go into the judgments. Peer reviewer cannot go into the judgments. He will just see the working papers. He cannot ask you, you have not kept this, why you have not kept this. No, you should keep document as per the standard, that's all. He can't say 505, I have kept it, this is what I have done, alternate audit procedure, I have done, finish. But he can't go into why you have done this, why you have done like that, he cannot question. But quality reviewer can say, you are supposed to have balance confirmation, you have not got, I will qualify. He has got the right, but he has to see the alternate audit procedures, the documentation he has to see. So he can go into the judgments, why you have not given an EOM, then why you have not given a CAM. You can say, why if alternate audit procedures are done and there is a possibility of problem on the confirmation of balance, then he can question why you are not given CAM. You can say this branch has not got confirmed, you have not relied on this. Or some documentation to show that this happened, you have not got the documentation, he can say that. So that means the quality reviewer can go into the judgment. So you have to be careful with your documentation. Because peer reviews for branches and all now going to come, I think it's July 25, I think it's getting mandated for every branch auditor. It has been postponed. So now from July onwards, even branch auditor comes under peer review mechanism. Peer review is okay. Quality review is not going to come for them. That's okay. For statutory auditor, quality review is automatically there. And NEFRA is also there. So for us, documentation, for central auditor, documentation is very vital everywhere. Because we see top 20 branches. So I am supposed to see 4 or 5 branches. Then branch auditor, I am also a branch auditor. Central auditor is also a branch auditor. So definitely he has to follow all the branch auditors issue. We have to keep the records. So that is why as a branch auditor also, that as a central auditor, we have to keep the working papers proper. If that is done, that's fine. So just keep in mind about all these things and document all those things. We have very little time to do those things. Left alone, we have to do the audit. But no other way, because a lot of things, documentations, it's coming on us. We have to have the proper team to do that with the available resources, with the time involved. So do it. But I think Institute is giving a lot of checklist for branch auditors also, as well as central audit also. We are getting a lot of checklist from given from various board of institute boards. They are giving it. Last time also that Excel utility was a fantastic utility. You can feed one thing, it goes to all the sheets. The name you can feed, the number of days, what are the works completed, how many days you have taken, everything was there. The Excel sheet was utility was a superb utility sheet. Last time Institute has given. Institute has given free of cost to all the auditors. You can download and take it. Like that they are giving. So we have to keep those things. At least that we can fill it up and do it. We can do it. So this is what I thought. References. Please have the guidance note 25. Revised guidance note 25 is very good documentation, very good material, wonderful material. The institute has given all the references, and only the important circulars and master directions are given in the website. You can download that. The book has got the main guidance note. Each and every item has been mentioned in that. Whatever I have told, 95% are there in that. Calculation of all the SRR, even the investments. Of course, the table and all are not there. But everything for the central auditor as well as the branch auditor, the guidance note is complete. Hats off to them. That guidance note is a wonderful. Even last year also I told everyone in the seminars that that is the best material you can rely on. See it. Please see that. All the circulars, master directions, because everything is updated. Mostly the IRAC norms is 1424, I think, 2424. Everything is there. And all the circulars, everything is updated in April, something like that. That date is also mentioning that. So the latest one, you need not go to the old circulars at all. The latest circular is master directions, master circular is available. That can be referred for that particular item which you have an issue. Everything is there, and the numbers, everything, even year-wise, all the circulars, directions are listed with the key item, so you can search the key item and go into it. Because control, if you do it, you get the key item, you can search and do it. Thank you.
Some loans, and it's interest subvention on agricultural loans less than 2 lakhs, more 2 to 3 lakhs, and all these things. Is it mandated by RBI or is it?
Yes, sir, it is mandated.
But can the central statutory auditors take up with the RBI to do away with those certificates, because that's taking a lot of time of the central branch or SBAs? Instead, we can concentrate more on the NPAs, lendings, account review, analytical procedures. All these can take more time instead of wasting this time on these certificates.
No, sir.
This can be given by the banks themselves using their inspection department or concurrent auditors. Why SBAs have been burdened with such work? It's only completely out of context of the topic we are discussing, but I wanted to voice it in some forum, because I feel the difficulty of spending so much of time and resources in these trivial issues rather than the bigger issues.
Sir, number one, we can't question the RBI. Number one, very simple. Okay. Number two.
I'm not asking to question RBI. It's just can't.
I'm coming to that.
Since the central statutory auditors have access to RBI, can't you put forth the opinion of the branch auditors to the RBI so that they can take a revision on that? Just an expression that you can take up this matter with the RBI. We cannot question RBI, but at least can be suggested to RBI that these things can be done away with for SBAs.
No, I'll answer that. See, on the second part, first part, okay. Second point, the certificates which you are giving is being accumulated, and the central auditor is submitting the combined consolidated certificate to RBI. Based on that, RBI is having a statistical information in case of subvention and all, the credit, the refunds to the banks are given only based on that. For that, RBI wants the auditor to verify. Rather, the banks cannot be asked to give the information. Someone has to verify us from the auditor. So we have a responsibility to tell RBI, yes, the bank is correct, this is the figure. They are asking someone to verify that. As an auditor, he is asking us to verify. This is consolidated, not that you are giving a report and it's just given a go by. That is consolidated by central auditor. We give a consolidated report to RBI. It is done, sir.
CBS, and they say they give the list of accounts, some 30-40 accounts, and for example agri loans. So if you want to verify each and every account and certify the amount is correct, it takes a lot of time and effort from our part. This can be given to the concurrent auditors for a special fee or something, so that the statutory auditors can be reviewed. This is just only a personal view from my side, so the central auditors can take up this matter. I can also understand that based on our reports, central auditors are consolidating these certificates and giving a final certificate. But the entire matter can be done away with for both the auditors and giving these values. And concentrate more on the financials, reporting and disclosures, review of the accounts. All this can be more qualitative work can be done rather than these certificates. This is just an opinion. If it is because since SES have access to RBI and the board bank management, I thought it can be taken up by SES to RBI. That's what my opinion is.
We don't have access to RBI. RBI is having access to us. That is one thing. Okay. No, that is right, sir. I can accept that. I can. Who is to see that is something which banks have to follow up with the RBI to do it, right? But concurrent auditors, a lot of things concurrent auditors are not taking it up. That is the problem, because we have asked something to taken up by the concurrent auditors. Because as I said in one case, the ICFR. The ICFR, when the issue was came up, we have asked the ICFR to be tested, and wherever the issues which have been pointed out by the branch auditors as ICFR issues, we asked them to be verified by the concurrent auditors. They have verified, the concurrent auditor verified, and they gave it back to us. Yes, sometimes they take it up, but going on giving these certificates, it's a year-end certificate. It's not monthly, quarterly. It is a year-end certificate. It can be given by concurrent auditors. It's a bank's perspective. But RBI wants a central auditor to certify it. They don't want concurrent auditors to certify. So it is a overall central office concurrent statutory auditor to give this overall figure, not a branch-specific figure, because someone has to consolidate the figure. Number one. And as far as verification is concerned, it's not a figure just typed out and given to it. There is a verification process involved in that. Not that it is just not a figure given, because I've seen a lot of figures given, then it turns out to be wrong. There we don't verify, that's the problem. Not that it is wrong per se or just system driven. It is not system driven. Once a system driven figure comes, we are supposed to verify that. That is where someone comes into it. Either it can be concurrent auditor or branch auditor, that is different. That is accepted. Yeah. Yes. Sir, totally accepted, sir. That is one more extra work given to the branch auditor. Okay, it can be done by a concurrent auditor, but anyhow it comes to the central auditor, we have to give that figure. As far as we are concerned, either branch or concurrent auditor, someone has to give that figure. But it has to be verified, not that we are just pulling out the figure and just giving it. That doesn't mean, because it can be system driven, it can automatically flow to the RBI straight away. A lot of other returns goes to RBI state. That is not verified by auditors. It's a total figure. Totally it goes to as per system. It uploads to RBI. That and all is okay, because that is not verified. It need not be verified. But these things has to be verified at the branch level. Then only it will go. They believe branch auditor has to do that verification rather than concurrent audit, because it is balance sheet perspective. Some yardsticks have been given, but it is branch audit level perspective, not a concurrent audit perspective. It could be like that, but I don't know. It can be taken to a concurrent audit. I can see that item to tell you whether it can be concurrent audit issue. But it can be done like that. But only thing, whether concurrent will take it up as a year-end level one time. It can be a monthly return. He has to make a specific amount to do that auditor. And it can be at the branch level also. Then amount has to be specified. The overall audit fees is fixed based on that only. For us also, we don't get anything out of that. As a central auditor, when I certify, I don't get anything specific out of the certificate, because it is all clearly laid out. What is that we are getting it, like that. But concurrent audit or branch audit, yes, that can be taken up. That is right. KYC itself could be an example. Very simple. Because a lot of branches where penalties have been imposed by the RBI, that KYC is not done. Simple KYC itself can be taken into account, but rest are all account specific. It can't be a control issue of the bank, because see, once in my example I gave you that the system automated in my example, one account only it failed. He has not done and he has given it. The question is, he has already overridden the controls. Once the overriding the controls has happened, we don't know how many he would have done. He has given one report. So that could be a control issue where once that is given, a complete report of that particular branch has to be undertaken to see whether such things has happened in that case. Yes, that could be a control issue. Yes, it could be a control issue. Only in that case, there was only one account, so it was left. Rest are all okay. So automation, because that is all manual driven. You can have an issue on the controls, we could say overridden. So you can have that as an issue, that the system is without proper documentation. If someone is entering into the system, is a control issue.
So you mean to say that wherever manual intervention is there, and if there are some issues,
yes,
that can be taken as a
qualification? Yes, it's an issue, because it is a control issue. No one is verifying it, no.
Fine.
We can't verify that, because it is a manual thing driven. We have found out in one case that this is not happening. This is the control at that branch level, we are not doing it. Then KYC is not updated, not getting it in many cases. That could be a control issue. We will have a problem at branch level, because that's where penalties are levied.
Okay. One more question, sir. As a branch auditor, I am putting MOC for a NPA classification. I'm just asking whether as a central auditor, can you ignore that MOC saying that it is a trivial item?
I specifically avoided that question. I mean that because I told you about I will enhance it, but I will not reduce it. I used that word. I used that word specifically. I didn't go into it. You won't believe. As a central auditor, when we go to the particular zone, I think only some bankers are here. Okay, no other regulators are here. When we step into a zone, the first thing they'll come to us is this much of NPAs have been pointed out by the branch auditors. These are all wrong. Please remove it. This is the first thing we face when we go to the zone. 100%. Even right now, right from day when I started my central audit to this date, most of the zones we have got this issue. One, I will quote one auditor who I contacted him saying, why sir you have given this NPA? This is not an NPA at all. 90 days norms, he has got a lot of credits, but still he is overdue only, but it's not more than 90 days CC account. Sir, why you have given NPA? The auditor is saying, sir, this branch manager is very adamant. He did not answer all my queries properly. I wanted to teach him a lesson. I am quoting exactly the words of that auditor. I wanted to teach him a lesson. So I made this NPA. Let him suffer for that. Sir, then this is not an NPA, sir. If he reports to RBI, you will be in trouble. I don't mind. I have got enough issues to tell that he is wrong. But this is not NPA. Yes, sir, please, you reverse it. Please, you reverse it. Because I cannot reverse NPA. Your answer. I am not supposed to reverse NPA unless there is inherently that NPA is wrongly given by the auditor. That is what I am trying to. I have to find out that he is wrong. If at all I want to reverse, I have to take the concurrence of that auditor to reverse it. I don't have anything on, I don't have power to reverse. I can only enhance and put new NPAs, that's all. I cannot reverse an MOC given by the branch auditor. That's absolutely ruled out. Because the moment I am reversing it, the NPAs of the branch versus zone NPAs is tracked by RBI. Very easily they are tracking it. The branch NPAs is there, zone NPAs is there, both will not match. Very easily RBI is matched. Immediately you will find out why this auditor has reversed it. If it is correct, I am happy. If it is not correct, RBI will be on me. So I should have a record as to why I am reversing it. Classic example, I told you that in gold loans, accounts were closed. What you will do with the NPA? Now the bank came to me saying that this MOC is given by the branch auditor, sir. Next month, after some days, that has been reversed. What I will do with this MOC? Reverse it. How can I reverse it? This branch auditor is given. How can I reverse it? That is a very big issue. I don't want to tell what has happened after that, but that is an issue. Where how do I can't go to, it is correct. The branch auditor is correct, in fact. Then how do I reverse it? So, lot of working papers I have to have, lot of details I have to have, and you will be surprised because once I go back to the branch auditor, he is not available because branch audits, they get 2-3 branch audits. One auditor, I am arguing with him. He is not available in this place also. He can't come down back to the branch to rectify also. He is in another audit. He will come back only after 4-5 days or 10 days. So he is not coming to change also. Even if he accepts, he is not ready to change. You change, that's what he is saying. I am getting overall. Then I asked him, you send an email. At least I have to have that on my record to confirm that. I have to get that. If that is an error, I have to see why there is an error because the zone are well prepared. Once they want to come to me for reversal, they are very clear. Then only they will come to me. They will not just say, please reverse. That they will not do it. So they will have details. Which branch auditor probably would have escaped his eyes. So that is what they are having. Probably lot of other information would have come in later. The documentation was not available to the branch auditor. That is what normally happens. Another one more example I can say that stock audit is not there. He would have qualified. He would have given MOC. They will get another stock audit report. Some auditor is giving the stock audit report even on that day. And that is very much available. Then once the stock audit report is there giving a Paka DP, what will happen? But that was not available to the branch auditor, correct? Then we can take a call as to whether it is reversed. I will take the concurrence, sir, this has come, can I reverse it? He will say yes, then I have to reverse. But I have to talk to the branch auditor then only I can reverse. I can't reverse it on my own without any documents unless it is patently wrong. There were some issues where it is patently wrong. That I have reversed. I can do that. I have my own records to satisfy. That's all. Otherwise, I can't do. I have no power to reverse branch auditors' MOCs. No way.
Last question. You talked about the materiality. So at branch level, which benchmark we have to take?
Same overall materiality to take because profits of the branch is also available. Yes.
On advance.
Advances, see, that is performance materiality. That itself is sufficient for you. But overall materiality, you can take it as a profits and do that. That is all, because you are guided by the performance mentality, and as per laws, your advances and all, you have the figures with you. Rest of the thing you have to do 100%. I think what else, expenditure and all, what is you are going to have? Because mostly in most of the banks, the TDS is not applicable. It is centralized, and the expenditure, rent and other things are taken at zonal office level. GSTs are handled by central office. Nothing is there in the branch level. So you won't have any issues at all, and doing 100% audit on the other expenditure and other things. Only advance is the figure which you have a benchmark. RBI itself has specified how much you have to see. Only thing, you have to have a sampling method to find out how much you can see further. Not only that advance you have to see some more advance. You can take different type of projects you can take, products you can take, and keep a sampling method with it. That is enough. So that itself is a materiality. But materiality computation has to be done based on the benchmark. That is overall materiality. That may not have any basis, value. That is it. But only that is to see that this it doesn't surpass the performance materiality. The performance materiality should not surpass the overall materiality if there is a misstatement. That is, whenever you have issues in the advances, what is the total, whether it surpasses. That is what you have to see. It will not happen. At branch level, it will not happen.
Any more questions? No. Sir, okay, sir. Sir, on behalf of SARC of ICI, thank you, sir, for a wonderful presentation. It was more knowledgeable and insightful. I also thank the members for making this session more engageable. Yeah, thank you for all this. Thank you, sir.